All right, there we go. So, yo, what's up for y'all watching this on the YouTube replay? We got a good stream to go over. Our account is at an all-time high right now. So, this is crazy. Our Weeble account right here is up 1.1% on the day, and we're up 12.3% all-time in here. And one stock I've been kind of recommending over the past couple of streams is actually ticker symbol PSIX. And I literally bought this company 2 days ago when the stock was at an all-time high, and the company just continues to keep hitting new all-time highs. So, it's pretty crazy what that company's been doing. But yeah, pretty cool that our account's at an all-time high today. Here are some of our losers in here, of course. We got Zoom, UiPath, and stuff. But here's our Moomoo account right here, a buy and hold portfolio. So here are all the stocks that we own in here. Only one stock is down on the day in here. It's just Powell Industries. But yeah, every other stock is green in here. And then there's our main account, our Robinhood portfolio. So we're up 0.53% on the day in here. And these are all the stocks that we own in here. So these are all dividend paying companies. Yo, what up? We'll look at TMC. Yeah, I think that one's going nuts today. I think it's just momentum. And here's the S&P 500. They're up 0.85% on the day. So yeah, congrats if you own stocks. Looks like the overall market is happy. S&P hit an all-time high. So did the Qs. And here's our Roth IRA as well. Every stock in here is up on the day. We only got 3 little stocks in here. You know, our Roth IRA is pretty tiny. But yeah, let me go check out TMC for this guy. Yeah, I think that's like a huge momentum company. This is the robotics company that sends robots underwater to like suck the minerals out of the water, like cobalt, nickel, and stuff like that. But this is still a startup right here. I wonder if there's news that the company is no longer like a startup, like they'll finally have some revenues. Oh, this does not. Okay, there we go. Successful share sale. Oh, so maybe they diluted the shareholders and they lose net income every quarter, obviously, because they're a startup. But I really want to see that company finally start to make some revenues. What do you think about Live Person? Is it IPSN? Or no, it's probably LPSN. Let's see, LPSN stock. Let's see if we can find this one. Yo, what up, Herdish? Yo, we're in a hotel right now, and this Wi-Fi is junk, man. Hopefully I don't regret streaming. I mean, this is rough, man. Okay. Appreciate y'all being here, though. So this is a dollar company. What's the market cap? So yeah, if you look in the top right, this is only $100 million company. Yo, what up, Ryan? We'll look at Roku. And yo, what up, Eric? We'll look at Google as well. Yeah, I got you. So here's LivePerson, $100 million company. I don't know what they do. I guess we can go figure it out. So hosted services. Let's see how that's doing. So yeah, this is not really what you want to see in a company. If we look at their hosted service revenues, it's kind of not doing great. It's down 23% year over year. So yeah, guys, the market closes in 40 minutes. It closes early today. So market closes in 40 minutes, but we'll be streaming a little bit longer than that. So let's look at Roku right here, and then we'll look at Google. Oh yeah, then we'll look at Hood and Nvidia. I want to get to all these stocks. And Datadog, yeah, Datadog just got added into the S&P 500, Jordan. That's why that one's up so much. But here's Roku right here. This is kind of the TV software company. You know, they pretty much sell you a TV for break even, and then they make their money selling you the software after. So check this out right here. Let's go see how they're doing. So accounts and average revenue per user is $41. Actually, wow, that's crazy. Streaming hours is 35 billion for the quarter. That's crazy, actually. So how's their platform revenue doing? I know Roku is a nice growth company. Kathy Woods owns them, but I think they're losing money. So yeah, the platform revenue is up 17% year over year. Nice double-digit growth. But yeah, if we go to this net income right here, they're super close to profitability. It's, they're losing 50% less. The market closes early today because tomorrow's the 4th of July and the market's closed tomorrow. I don't know. It's just always like that. I really don't know why it's closed early, but it closes at 1 p.m. and it basically closes in 25 minutes. But yeah, this company loses net income, but they're so close to profitability. They're losing 50% less net income. And as long as they can keep that trend up, I think this could be a good one to just buy shares of. Yeah, look at that free cash flow in the most recent quarter. Yo, why is Sleep said, what app is this? Yeah, if you want to get this app, it's in the link tree in my bio, the very first link there. So let's see. Let's do Google. This is another company I own. This is another fantastic stock, in my opinion, that you should just buy and hold for the long run. No real reason to sell out of Google because they now pay a dividend. The valuation is dog cheap. I mean, the PE ratio, what this is just the net income multiple. Google trades at 19 times net income. It also includes any stock buybacks or dilution. And in this case, Google's buying back their own stock. So anyway, Morningstar has it at a $237 stock price target for the stock. I just like looking at the Morningstar research sometimes, see what they're saying. But the best part about Google, in my opinion, is their finances. And the Google owns so much. They're like an ETF in one. Google owns YouTube. They own Android. Uh-oh. There's that. Uh-oh. Hey guys, I hold on. I'm at a hotel and this Wi-Fi is so bad. I really hope I can keep streaming. I appreciate y'all being here. But hopefully we're back. Yeah, I wanted to still stream anyway. Thanks for being here. But oh my goodness. All right. Let me see. Is the Wi-Fi that bad? Jeez. Okay. Um, let's get back to this. Hopefully, y'all can hear me. So here's the best part about Google. If we look at their revenue year over year, Google grew their revenue 12% year over year. So that's a nice little increase. Google grew their revenue by 12%, but if we go to the net income, Google actually grew their net income by 45%. So what does that mean? Google's growing their net margins. They're more profitable per dollar. So it's great news. And yo, Invested09, thanks for the lightning bolt, homie. I appreciate you. And Juan said, what app is this? Yeah, if you want to get this app I'm on, it's in the link tree in my bio. It's that very first link there. It's actually a brokerage. And yo, I really hate to, I really hate this, that the Wi-Fi is so bad in this hotel. All right, let's keep going here. Yo, Improvement, how's it going, dude? And yeah, Google is the only company I hold shares of right now. Oh, really, Ryan? I didn't know that. Yeah, Google's a good one. They pay dividends as well. They do crazy stock buybacks. So yeah, let's get back to the stock analysis. Yeah, that one dude said PSIX is rallying. Yo, was it you that bought shares that when I announced? I've 2 streams ago, or pretty much every stream since then, I've been telling people I really like this company right here. I bought them at an all-time high, but I think they're going to just continue to hit new all-time highs because statistically, whenever a company hits a new 52-week high, it's statistically followed by a bunch of more 52-week highs, like a cluster of new 52-week highs. But the same is true in the opposite direction. They hit a new 52-week low, it's statistically followed by more 52-week lows. So someone said Hood as well. Yeah, dude, Robinhood's been crushing it. They are down on the day because of there was some regulation issues around their new stablecoin thing in Europe, but I'm long Robinhood. I barely have any shares left. I just have 5 shares. I took so much profit on them, and I regret every share I've ever sold. But the fintechs have been going nuts. Like Dave is a fintech. Where's SoFi? Yeah, SoFi Technologies. We're up 200% on them. They're great. So yeah. So someone said DDOGs. Yeah, so Datadog, this company just got added into the S&P 500. So that's why they're up 15% on the day, literally just because they got added into the S&P 500. There's going to be so much passive money that kind of flows into this company now. This is a software name that's seen some incredible growth. So yeah, look at this. There's not too much data, but from 2022, it was 1.6. Now it's 2.6. So it's seen some really nice growth there. And let's see, are they making free cash flow? Yeah, look at that that's what FCF stands for, free cash flow. They're making a lot of free cash flow. Yo, Angela said, what app are you using? Yeah, hey, if you want to get this app on here, the app I'm using, go to the link tree in my bio, the very first link there. And Catherine, hey, I missed you. You haven't been. Yo, if y'all don't know, this TikTok account that I'm on right now has been permanently banned for 2 weeks before a couple days ago. Literally 3-4 days ago, I got an email saying, hey, your TikTok account's unbanned. And it was permanently banned for 2 weeks. And so I'm so glad to be back on TikTok. But I'm scared it's gonna get banned again because literally yesterday my stream got taken down. So if you want to help me out, go subscribe to my YouTube channel. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. I stream on there. I'm streaming on there right now as well. So if you missed anything, you can kind of replay it over there. So anyway, someone said BULL. This is Weeble stock. And check this out. Their share structuring is really complicated. So only 5% of the company, like the whole entire market cap, the $6.5 billion market cap, only like 5% of the shares are available to trade. So there's so much volatility. And by the way, I've given Weeble a lot of money. Weeble is just this app right here. I've probably given them so much transaction fees and stuff like that. So here's my account. But yeah, this is their stock right here. They're not an American company. They have like is it like a tenth of the size of Robinhood? So they're a $6.5 billion company, and Robinhood's like an $80 billion company. So that is interesting. We could see Weeble start to trade like a Robinhood one day. I know they just got profitable. Robinhood's making like hundreds of millions of net income. Here's Weeble. They just now got net income positive, making 10, 12 million. So it kind of makes sense how they're a tenth of the size of Robinhood. I wonder if they're reasonably valued. I got to do more research on them. But hey, I'm a customer. I really like their platform. What do you think about Cat? Yeah, dude, Caterpillar. I love this company. I followed your recommendation, made 10%. Nice improvement. Hey, again, nothing in this is financial advice. I'm not an expert. But here's Caterpillar right here. This is a great company, in my opinion. The valuation is low. You get a nice dividend. Here, I'll just show you that for yourself. So look at this. The PE is a 19. And historically, if we look at the historic PE, that's very fair. Fair valuation, the Morningstar research has it at 422. Here's what I kind of like about the Morningstar research. We can read, what do the bulls say? Management margin potential of 22%. Oh, well, I can read what the bulls and the bears say. But I just like looking at the financials for myself and look at where this company's revenue comes from. I love how diversified that this is. Like 46 comes from energy and transportation. Then they have the construction industries. Then they're in the resource. So there's so many businesses that they have. And if we go to the net income right here, they're making a lot of money. 2-3 billion in net income a quarter. And what's the dividend? Yeah, 1.4% yield and only a 25% payout ratio. So that's great. ENG said, I'm going all in on Weeble. Hey, good luck with that, brother. Wolf Speed, bro. Hey, yeah, sorry. I want to get to all the stocks here. I do apologize. But Wolf Speed, I feel bad if you own this company. They're up, 50% on the day. But, you can barely see it. Like, look at that. You can't even see that they're up 50% on the day unless you really zoom in here. But, here's the thing about Wolf Speed. And I'd be really careful about this stock. If you look at it, this is why I'd be super careful. If you look in the top right, this whole company is worth $180 million. So remember that. The whole company is worth $180 million. You could buy into that company at this valuation, but look at this net income they're making every quarter. This is what people, I hope, understand. This is why they're at an all-time low before today. They're losing 200 million plus of net income a quarter. They're losing nearly $1 billion a year. So yeah, you could buy the whole company for, 140 million, but you're buying a company that loses over 120 million every 3 months. So that's why this stock's at an all-time low, and I'd be very careful. That's why I like looking at the numbers. It usually explains why the stock is either doing so good or doing so bad. Bought Wolfspeed at 128. Now I'm down 100. Dang, Handy. Yeah, I'd be careful. I wouldn't really buy more. I'd try and maybe get out that name. That it could be a fun swing trade, but that's not a stock you want to buy and hold for the long run. Um, all right, let's see. Pepsi stock. Hey, yeah, dude, Pepsi's hasn't been doing so good right now. Hey, well, what up, John? We'll look at Zeta after this too. So here's PepsiCo. I love their drinks. I love Doritos, Cheetos, Gatorade. They own a lot of those names, but the stock has really been on a downtrend recently. And I like this one as a dividend play. So look at this. You buy Pepsi right now, you actually get 4% of your money back in a dividend, which is very cool. So 4% dividend yield here. Valuation, 19 times PE seems pretty fair. And if we go to the net income down here, most of this is being paid out in a dividend, but they're printing money, 2-3 billion of net income a quarter. So that's what's cool about PepsiCo. I think they've just seen some slower growth. So yeah, look at that. Pepsi's not really growing anymore. If we look at their sales, it's actually down 1.8% year over year. So they're actually, negative growth. And we want to see that the sales come up, the lifeblood of the company. So John said, he didn't say Meta, he said Zeta. So this is a cool company, actually. I've looked into them before. I think they're at a pretty good valuation right now. Wait, I never saw where this company's revenue comes from. Let's see. So all of it comes from the US. That's really interesting, actually. But look at this right here. Incredible growth on Zeta right here. So the revenue grew 35% year over year. Revenue's up 35, and they're just now getting net income positive. So I expect this time next year, they're going to be making net income every quarter. I mean, they used to lose, 50 plus million a quarter. Now they've really narrowed the losses. They even made net income last quarter. Dude, this balance sheet's incredible as well. They're growing their assets, lowering their liabilities. So anyway, everything's headed financially in a great direction over there. All right, so do I have to start with the large amount? Nah, man, I remember when I first started investing, I just put in 100. The day I turned 18, or it was the day after, I just put in $80. And then it's like addicted. You'll just want to deposit more into your account. You'll be like, dang, why am I spending money on shoes? I used to have a shoe collection. I used to love shoes. And now I love stocks. That's my new collection. I love stock. Nike stock hasn't been doing good though. Yeah, here's my risk on portfolio, and then we also have a dividend growth portfolio. So every stock in here pays a dividend, and all these are dividend growth companies. Hey, look at that. We're actually at a new intraday, or pretty much at a new intraday high right now. So let's go. The only stock down on the day in here is McDonald's. What's the SPY doing? So yeah, look at the S&P 500 up 0.9%. That's why you got to own stocks. I mean, the market's done great. So let's see. Which sector will benefit from the rate cuts? The REITs will, anything interest rate sensitive. There's so many interest rate sensitive sectors like the home builders, the REITs. You know, like a ticker symbol O. Someone said, "Hey Carson, let's see Palantir in ITM Power." Hey, what's the ticker symbol for ITM Power? Give me the ticker symbol and I'll check it out for you. So someone said Palantir. Yeah, hey Carson, how's it going, dude? And well, I want to get to Pony AI. Yeah, sorry if I don't get to all the stocks here. Yo, remind me to look at Pony AI again, Matt. I want to get to all the stocks here, but here's Palantir. This is such a great company, but the only bad news is Palantir is a bit overvalued. They have a high valuation is what I'll say. So yeah, if we go to the PE, which is the net income multiple, they're trading at 580 times net income, which, is expensive. But here's why they might deserve it. Look at this right here. The government is literally half their business. So many police stations use Palantir software. And look at this right here. Incredible growth. It's up 45% from the previous year. So that's incredible. I know a lot of people didn't like Palantir because they were helping out ICE and stuff, but yeah, so that's their government revenue, and then they also have this commercial business, which is like with S&P 500 companies. You know, it's up 33% year over year. So both segments of business are growing like crazy. They're profitable. They're making net income every quarter, and they have no debt. Look at this balance sheet. It's incredible. They have no debt at all and a lot of cash, and the cash is actually earning interest. So that's what's up. Hey, what up, Tay? How's it going? Yeah, if you guys got any stocks you want me to look at, let me know. I'll check them out for you. So ITM Power. Um, ITM, yeah, I can't find that one. ITM.L. I can't. I don't think I can view that one on this app. I do apologize there. Yo, Huckleberry, hope you're having a good day too. Yeah, happy 4th of July. The market closes in 25 minutes. It closes early today, so market closes in 25 minutes. Uh, let's see. YieldMax. Yeah, so this is just a dividend ETF. You buy this to literally max out your dividend income. So if you look at the dividend yield, they have a 63% dividend yield. And yeah, look at that. They own all of their they basically just sell calls on Supermicro, Google, Taiwan, Disney, all these. They just basically sell a bunch of calls on stuff and pay you the premiums. You won't. This is the thing. You're not going to outperform the market with this ETF. You won't outperform the market in the long run, but you do maximize your dividend income. They pay you a monthly 60% yield. I mean, that's crazy. Sell covered calls. Hey, I love calls. That's like passive income. Let's see what app. Hey, Dakota, if you want to get this app I'm on, it's in the link tree in my bio. It's the very first link there. It's actually a brokerage. Let's see. OKLO. Yeah, that's a nuclear stock. Yo, I'll show you the nuclear watch list right here. I think you'll like this. No, go away. There we go. So nuclear stocks. Yeah, OKLO is at the top of the watch list, really. So let's see how they're doing. So this might be a startup. I don't remember, but they basically want to make these small nuclear reactors without those huge like silos, if you kind of know what I'm talking about. When you kind of just picture like a nuclear energy facility, like those two huge like silo things. They want to make these small nuclear reactors. So I want to view the financials here. If y'all don't know, I'm at a hotel right now, and this Wi-Fi is really bum, and it's going slow. So if it starts to get a little laggy, it's because of the Wi-Fi, and I apologize. And it doesn't want to load this. Jeez, really? What? Okay. We'll get to it though. I wanted to stream anyway. I'm like, I can't not stream today. So yeah, this is a revenue-less company. They are a startup. So if we go to their revenue right here, it says no data because they've never sold anything. They've never sold a product or a service. And they're losing it. But they just have momentum. They move with all the nuclear stocks. All right, let's see. SoFi, yo, dude, I got some SoFi. The fintechs have been going nuts, like Robinhood, SoFi. We do own 24 shares of SoFi. I might be a little biased on this company, but let me tell you why I believe this company deserves the hype, and they deserve to be at a 52-week high right now. Is that an all-time high? Not an all-time high, but we're at a new 1, 2 year, or probably like a 3-year high on SoFi. And here's why I think they absolutely deserve it. Look at, this is a fintech right here. You know, they have their own banking charter. Look at their financial services revenue. It's 40% of the revenue. Look at the growth here on just their financial services revenue. It's literally doubled from the previous year. It's up 101% year over year. So that is incredible revenue growth. So they're just a growthy company growing their revenue like crazy. And if we go to the net income, people are starting to really take SoFi serious. They're actually making net income every quarter. So that's why I like them. It's just a huge growth company. Someone said CoreWeave. Yo, that's NVIDIA's like largest holding. So yeah, here's NVIDIA's top holdings. You know, CoreWeave, or no, that's not Nvidia's portfolio. Hmm. Yo, sorry for the lag, man. Yeah, hopefully we're back. Hey, sorry for the lag, man. I can't control it. I hate this hotel. Okay. But here's Nvidia's portfolio. Hopefully you can hear me. Hopefully we're back. And if we go to Nvidia's largest holding, Nvidia owns a lot of CoreWeave. CoreWeave is actually their largest holding. It's 91% of their portfolio. Then they own some of ARM, APLD. But yeah, CoreWeave, this company, dang, this is one of the best IPOs I've seen in a long time. IPO'd at $40 and now they're at 160. And here's the thing, this is a huge growth company. If we go to revenue right here, look at this. It's up 420% from the previous year. The revenue this same quarter last year was 188 million, and now it's 980 million. They have really ramped up the growth of their revenue. So huge growthy company at CoreWeave. We don't have much numbers on them because they just IPO'd, but I'd love to do more research on them. I have 130 in my Weeble. I want to increase it to 30K. Hey, you just gotta that you just got to deposit to get to that number. Probably you can't. That'd be a tough way to trade from 130 to 30K. But yeah, you just got to up the deposits. Try and just deposit a couple hundred every month. Yeah, Ketchum said the audio goes in and out. Yep, that probably makes sense because I'm at a hotel and this Wi-Fi is bummed. But hopefully we're back and hopefully there's no more audio issues. Should I hold Wolf Speed? I just want to. I wouldn't just. No, that's not a stock I'd hold for the long run. That one is really risky. Oh yeah, Pony AI. Let's go to this one right here. I think this is another recent IPO. So hey, what up, Trap? We'll look at O'Reilly as well. So here's Pony AI. They're a $4.5 billion company. So that's a really big market cap. Let's see what they do. Hey, looks like the Wi-Fi is better. So engineering solutions services. So well, let's just go down here. They have a really good balance sheet. They have no debt at all. How much cash do they have? So this company has $700 million of cash, and the market cap was $5 billion. So nearly 15% of this company's whole market cap is just their cash on hand. So that's interesting. They are losing money every quarter, and the revenue doesn't appear to be much, like 13 million, but it did grow 10%. There's just not much history because we can't even see the year-over-year growth rate. So I got to see more history behind Pony AI, but it seems like 15% of the companies crash. Hey, try not to spam there. Hold on, let me. Sorry about that, guys. Yeah, try not to spam. We'll get to all the stocks here. I do apologize. So here's ORLY. This is O'Reilly Auto Parts. Y'all probably have seen their commercial and stuff. But this is a huge buyback company, and it's kind of recession resilient. You get a flat tire, you need your oil change. You're still doing that in a recession. You can't drive on a flat tire. Can't drive if your car doesn't work. So this company, despite like slow revenue growth, for the stock price appreciation, the fundamentals haven't been that good. Like the revenue's growing 4 or 5% year over year, but this company literally buys back. Y'all ready for this? Here's why the stock goes up so much. They buy back literally 5% of the company every year. That's what they spend all their net income on. They don't pay a dividend. They literally return all the money to shareholders by buying back their own stocks. You now own way more ownership in the company. But yeah, they print the money, $2 billion plus in net income a year. That's crazy. $2 billion of net income, and they're a 78. Yeah, they traded a 33 PE. That's probably thanks to their buybacks. How much money I need to make? 30K. Oh, 30K in dividends. Yeah, that you need. It depends. Yeah, 30K in dividends a year. That'd be a lot. So hey, well, let's go check out DNN. What up, Connor? So Denison Mines. Oh, this is the gold company. So Canadian gold mining company, I believe, and it pretty much just follows the price of gold. What's the market cap? A 1.6. Yeah, they're a small company, a $1.6 billion company, and it actually doesn't look like they've kept up with the price of gold. So maybe they're not a gold mining company. Let's go see what they do. So, well, they mine something. Let's see. Let me go to the uranium. Okay, development of uranium. So this is a uranium play. Interesting. What about the balance sheet? Yeah, usually these mining companies have really good balance sheets. So yeah, look at that. They have no debt, but look at this, they're losing net income every quarter. Whenever you see this on a company, look, they're losing net income every quarter. It's got to come from somewhere. And as you can see, the assets have been slowly going down every quarter. That's because there's those net income losses. But they have so much cash that they have a few years left. So they're good. They're not going bankrupt, but it's nuclear mining. Yeah, nuclear energy is powered by uranium, the splitting of it and stuff. All right. Yeah. I thought it was gold. Then that's why I like to double check when we will have a dip again. Yo, I don't know, man. The market's been doing great recently. It's at an all-time high today if you've ever owned the market. Dang, what is the market closes in 15 minutes. So, yo, we're at a new intraday high right now. Let's go and check this out right here. Yeah, if we go to the QQQ even, QQQ's up 1% on the day. Literally crazy all-time high. Look at this year to date. At one point year to date, the Qs were down 19%. So the market was down 20%. Now we're positive 8%. No one saw this coming. No one expected this fast of a stock market recovery. Not even me. No, maybe Tom Lee or something, but I don't know. The market's done abnormally very well. So let's see. Figma IPO. Is that a ticker symbol? All Wrestle said, have you saw BMNR? BMNR stock. What's this one? So Bitmine Immersion. So wow, yeah. This company just rocketed today, up 162%. Look at them on the 5-day. Halted on circuit. So they got halted today. I wonder if there was any particular news, maybe something with Bitcoin. I don't know. Revenue from self-mining. So yeah, this looks like a Bitcoin mining company. So yeah, I don't know. Hey, they're at $150 a share. They're only a $600 million market cap. There's not many shares that exist then. That's interesting. Should I sell SoFi right now? Yo, I own SoFi too, and I'm up a crazy amount. I've regretted every share of SoFi I've ever sold, but I'm just keeping my SoFi. They deserve the hype right now. They've had the fundamentals are just growing. So SoFi's a growing fintech, and I'm just holding on to my shares for now. Let's see. But yeah, someone else said SoFi. I'll show you why I like. So I'll be super quick about this because we kind of just looked at them. But here's the best part about SoFi. They're a fintech. They have their own banking chart. It's where the revenue comes from. Look at this. 40% of the revenue comes from their financial services. It's at a record. It's up 101%. If I go to the annual revenue, what other company pulled this off? In 2020, your revenue was 11 million. It was nothing. 11 million for the full year. Not for the full year 2024. It was 820 million. I mean, that's incredible growth. It's doubled. 300 million just in the most recent quarter. And at this growth rate, what's it going to be this time next year? And SoFi's profitable, making net income every quarter. And, people are taking them serious. They used to lose net income every quarter. So they're a cool fintech. Yo, what up? Someone said Tempus AI. Yo, I think that's a Nancy Pelosi stock. Yeah. I'll be quick about this one too. I love Tempus AI because of the growth. I love companies that are growing their fundamentals, and those are the kind that I own. And this one checks the box. Look at this. 75% of the revenue comes from genomics. And look at this, the most recent quarter. It just jumped up 90% year over year. That's incredible growth. And that's just one segment of their business. If we go to their data and services, it's also seen very strong 44% year-over-year growth. I mean, incredible growthy company. They are still losing net income every quarter, but since they're growing so much, they'll kind of out. It's fine for now. So that's a cool one. Actually, we can go to Nancy Pelosi's portfolio. She's a super investor. So what's cool about this app is we can see like all her holdings and stuff. She owns. Well, we can see her like actual latest trades. But yeah, she owns like Apple, Amazon. She owns some cybersecurity plays like a CrowdStrike, a PanW, a Visa. What's her most recent purchase? She bought PayPal and Interactive Brokers and Comcast. Huh. Interesting. Let's see. The market makers. Yo, Steven said CAVA. Can't wait for the upcoming earnings this month. Yeah, me too. Earnings season's coming back. Yo, Aces said Oscar. We'll look at Oscar Health after this. Yeah, that one hurt on Medicaid news. But here's Cava. This is like a Chipotle competitor. They're a restaurant. They're up 5% on the day. Nice. And here's what's so nice about them that I like personally. It's that they're growing very nicely in this environment. Like, look at this. For a restaurant in this environment, they grew the revenue 29% year over year. I mean, that's pretty strong. That's really good, actually. And if we go to the net income, they're actually making net income every quarter. And they're actually making a lot more money than like a Shake Shack even. Like 20, let's go look at Shake Shack stock. It's ticker symbol SHAK. I really like this company. I love the burgers and everything. The stock's at an all-time high. Look at that. Shake Shack is at an all-time high right now, but they just barely make, their margins are so thin. Like they're barely making a couple million a quarter. Sometimes they lose money, but their stock's at an all-time high and Cava isn't. So, do you own any AMD? I sure do. Oh, wait. Oh, remind me to look at AMD. I wanted to look at Oscar Health real quick. So if we look at it on the daily, there were some new Medicare, Medicaid rules that are, they want to basically take profits away from like corporations like this. So this is a healthcare play, and here's why I really, really like this company. They have just seen incredible growth. Literally in 2020, their revenue was 600 million for the full year. Now for the full year 2024, it was 9 billion. So from literally 500 million to 9 billion, that's incredible. And then, just the most recent quarter, it was 3 billion. I mean, one quarter, that's nuts. So they've been kind of struggling to stay net income positive. But yeah, this is a healthcare, Medicare, Medicaid stock. But yeah, let me go to AMD. And hey, Andy said, what app is this? Yeah, if you want to get this app that I'm on right here, it's in the link tree in my bio. It's the very first link there to get this software. It's actually a brokerage. But yeah, here's AMD right here. I love this stock. I do own them, so I might be a little biased. But here's what I love so much about AMD. Here's the great news. Look at their PC GPU market share. AMD actually has a 16% GPU market share, which is pretty nice. But that's not why I like AMD. The real reason I like AMD is because they're a data center play. Check this out. Half the revenue literally comes from data centers. The data center revenue is up 57% from the previous year. So that's just immaculate growth. And also, if we go to the FCF, which is free cash flow grew 91%, literally doubled year over year. Net income grew 400% to 700 million. They have no net debt. This is an incredible balance sheet. Out of all the semiconductor stocks, Nvidia, Broadcom, Taiwan Semi, this one has the best balance sheet. They have no net debt. I mean, it's incredible. The liabilities are so low, so I do own that one. Here, I'll show you that actually. Here's my AMD position. I got I'm up 10% on them. But yeah. All right, let's see. Plug Power, Plug Power, RIP this company, because this one is going bankrupt, and I feel, but I didn't even see that. Wally, hey Wally, thanks so much for the rose there. I appreciate you, friend. So here's Plug Power, $1.7 billion company. So remember that number right there. This whole company is worth $1.7 billion. And look at these losses. This is the bad news. Literally just last quarter, they lost $1 billion. But even if that was a one-time adjustment, which it was, look at that. They're losing 200 to 300 million of net income every quarter. And that's 10% of the company, or more than 10% of the company they're losing every quarter in net income. So they're having to dilute the shareholder. It's just unfortunate. I have to stay away from Plug Power because of those huge net income losses. It's hard to trust that company, and they lose 10% of the market cap a quarter. Yash, hey Yash Patel, no way, dude. Thanks so much for the 2 lightning bolts. He said, "What do you think about bull stock?" Yeah, so that's Weeble, right? So, their share structure is a little complicated. Like they have Class A, Class B, and like some other weird Class C that's not really called a Class C share. So I'm still trying to learn their share structure. I think they're not a U.S. company either, but and only 5% of the company is available to trade. That's why there was so much volatility this day. Like, think about that. Only 5% of the shares were available to trade. But here's the good news about Weeble. Hopefully they'll trade like a Robinhood one day, but they just got profitable. Robinhood makes like 100 million of net income a quarter. They're making 10 million a quarter. They are profitable. That's the good news. Weeble just got profitable. And hey, I'm a customer. Look at this. I give Weeble probably so much in transaction fees and stuff. Here's my Weeble account. I do a lot of buying and selling in here. So, hey, I've probably given them a lot of dollar hollows. So, yeah, I like their platform. So, yeah, I like Weeble, but I still got to do more research on their share structure and stuff. Let's see. What do you think about SQQQ? Yeah, this is a trading vehicle. You don't want to just hold this on for the long run. And what's up, Osco World? How's it going, guys? Appreciate y'all. NOTE seems interesting. We'll check that one out too. So yeah, this is the inverse QQQ ETF. So whenever the QQQ goes up 1%, this goes down 3%. So you know how the QQQ, the market's at an all-time high today? Well, this is at an all-time low. So I guess if you're bearish on the market and you want to bet that the market's going to go down from here, you could buy this ETF. You just buy shares, and it is leveraged, so you got to be careful. But that's a trading vehicle. Let's see. Oh, Wally, thanks again, dude, for the gift there. Let's check out First Solar. I got you, dude. So then we'll look at Note and MB. I want to get to all these stocks. Yeah. Sorry if I don't get to all the stocks here. I'll get to all of them. I promise. So here's First Solar. This is a $20 billion company. The reason the stock fell, I remember a couple days ago, they gapped down right here because the new, I don't know if it was the big beautiful bill, but I don't know what it is. They removed they removed the tax incentives for solar. So if you had solar, you'd get some tax incentives from the government. Now they kind of removed those, but the stock has kind of just rallied off it ever since. And I love First Solar. for their fundamentals. I mean, look at this bottom line money they're making. They're printing money, literally 300 million of net income a quarter. So incredible profits on First Solar. Um, but yeah, I think where does their revenue? 93% comes from the U.S. Okay, so yeah, I do like First Solar. Um, how long should I hold SoFi? I think it's a hold on for 10 years kind of stock, but I'd maybe trim a little bit, but I definitely want to sell out of it. Let's see, UNH. Yeah, hey, UnitedHealth. This is the healthcare play. Basically, if this company gets kicked out of Medicare and Medicaid, and or if they get accused of fraud, they'll get kicked out of Medicare and Medicaid for 5 years, and that currently makes up 45% of the revenue. So that's why this company just collapsed so frequently when they were being investigated. That's why the PE so low. The PE so low because there's a lot of future uncertainty in their earnings. But yeah, if they're not kicked out, this is a steal of a stock. I mean, they're trading at 13 times net income. You get a 2 point or near 3% dividend. They just rose their dividend another 5%. We're also a customer. We literally use their OptumRx, and this is kind of why the government's on them. I mean, how do you do this? I mean, you're in 2020, the revenue was 35 billion. Now it's 133 billion. I mean, incredible revenue growth. And that's just one. Like United Healthcare is seeing a bit slower growth, but still 300 billion of revenue. Anyway, United Healthcare is just huge, and they make so much money. They're making like 7 billion of net income a quarter. Then they just pay out some of that in dividends. They do stock buybacks. Yeah. So United Health, I do like them, but you gotta. I think they're properly priced right here at this valuation. All right, FINV. What's this one? FINV. Finvolution. So wow, hey, this stock's actually done pretty good the past couple weeks here. So they're a small company, a $2.5 billion company. So so they're a Chinese stock. So we'll switch the revenue from Chinese to US dollars so we can understand it. So they're a loan facility, guaranteed income, post net interest income. How's their net interest income? Anyway, let's go see, are they profitable? Yeah, look at that. They're really profitable. And this is in US dollars. They're making 100 million a quarter pretty much. And that's good margin. They have like a 20, 25, 21% margin here. Really good balance sheet. So, hey, I see why this stock has done so good and why you like them. They're printing money. The only bad news is that they're kind of Chinese. But the fundamentals are still so strong there. So someone said, or that one dude, how's it going? He said PayPal stock. Yeah, dude. Oh, I forgot to look at notes in MB. Yeah, we'll look at those after this. So here's PayPal right here. PayPal, this company has seen some slowing growth. So here's why I think the stock is where it at right now. And so right now PayPal trades at 17 times net income. You know, that's like a valuation where they're not expected to gain or lose you any value. And here's kind of why. They're still growing, but the revenue grew 1% year over year. So the whole business just grew 1% year over year in terms of total revenue. That's kind of like the lifeblood of the company. So investors aren't too happy with the slow growth. I mean, there's only 1% revenue growth, but there is good news because though the sales grew 1, the net income actually grew 40%. So what does that mean? That means they're growing their net margin. Look at that. That's the highest margin of the year, 16.5. So, the net margin grew. The free cash flow is really good as well. They're making like, over $1 billion of free cash flow a quarter. So they're cool. And I know Nancy Pelosi just took a stake in it. If we go back to her portfolio really quick, Nancy Pelosi, these super investors have to make all their trades publicly, make them public by SEC law. Yes, look at that. She bought PayPal. It's now 0.3% of her portfolio. And not that matters. Not that I'd buy it because she did. But all right, let's keep going. Let's see. Pick up AMD. Hey, not fun. Yo, Roaring, what's up, dude? I do own AMD. Where's my position over here? I got 12.8 shares of AMD. Yes, sir. All right, PGR, Progressive. This has been one of the most best performing insurance stocks out there, just best performing stocks, and they deserve it. And I wouldn't even mind buying this stock at an all-time high. And I'll go show you a stock I did just buy at an all-time high after this. But look at this, the PE ratio. The current PE is a 17. I guess the industry average is a 15. So I guess I like looking at that, seeing what the industry average PE is. But yeah, they traded a 17 PE. On average, the industry trades at a 15. But this is the largest player. I think they deserve the premium valuation because look at this. Their personal lines. Look at this annual revenue growth. I mean, it's a grower. I mean, look at this. It's a grower, not a shower. I mean, it's up 24% year over year. I mean, this is incredible growth. What about the commercial lines? Because that's 15%. Yeah, look at that. That as well just hits a new record every year. And also, the best part is actually the bottom line, the net income. I mean, look at this. They're making two billion plus of bottom line after tax net income a quarter, and they also pay out these frequent special dividends. So if you look right here, you see in 2024 it was $4.90. That was a special dividend. Can I see the dividend history? So yeah, look at that. Normally they pay 10 cent, 10 cent, but look at that. At the end of the year, usually in January, at the very end of the year, they'll announce a special dividend, and it was $4.50 this year. They also do a lot of stock buybacks, but yeah, Progressive, great, just buy and hold forever kind of company. I don't see a reason to sell out of them. How can I sign in for this site? Hey, yeah, if you want to get this, it's in the link tree in my bio. It's the very first link there, Wally. It's free. It's actually a brokerage. I love this app. So someone said Adobe. So yeah, if you want to get the app link tree in bio. But here's Adobe right here. Yo, and this app is so useful. I'll show you all the features. I use Photoshop, After Effects like every day. So I'm a customer. But the reason the stock has been hurt so much because their thesis is being hurt right now. The financials are great, but the thesis is being hurt, like ChatGPT and AI. Like I just seen someone make a really good logo for their they made a logo in ChatGPT and it looks great. Like they never even needed to use Photoshop. And I was actually impressed with it. I'm like, dang, that would have taken me like an hour in Photoshop and that looks great. He did it in 1 minute. But I still use Photoshop every day. I like to manually edit stuff. The valuation's dog cheap. A 24 PE for this software name. And if we go to right here, the business is still growing. 75% of the revenue comes from their digital media. And look at the growth. I mean, it's still growing. It's at a new record in the most recent quarter. And that's the digital media. Look at the digital experience. This business as well is literally at a record, just like the other one. So for right now, the business is doing great. And also the bottom line net income. Look at this. Net income, 1.7 billion a quarter. So the numbers look great here on Adobe for now. Free cash flow as well, over 2 billion of free cash flow. So, pretty sure you talked about Sim a while ago. They've been crushing it for me. Yo, yeah, dude, I've been pitching Symbiotic for a while. Whenever someone mentions a robotic stock like Rich Tech Robotics, I'm like, yo, don't buy Rich Tech Robotics. They have no patents. Go buy Symbiotic. Yo, Oscar, what's up? How you feel about waiting on a pullback for SoFi? So, yeah, I would definitely do that. It's tough buying SoFi when it's literally at a 3-year high today. I agree with that. Probably wait for a little. Probably a little pullback there. How about Hood? Yeah, dude, this is my best performing stock. I'm up nearly 600% on Robinhood, and I'll show you that after this. But this is incredible. We can see their net cumulative funded accounts. Basically, the reason the stock went up the past 5 days recently is because Robinhood announced this new token thing where you can invest in SpaceX and OpenAI through a token. But here's the real reason I think Robinhood is just a great fundamental stock. I mean, first off, they're growing. The revenue grew 50% year over year. So incredible revenue growth. Revenue is up 50%, but look at the net income. They're making hundreds of millions in net income a quarter. The net income's up 100%. That means they're growing their margins, but they're making hundreds of millions in net income every quarter. People are actually taking SoFi serious now because they're making real profits. If we zoom out to last year, this is when I was buying the stock. No one really trusted Robinhood. They were losing hundreds of millions a quarter. See, it was tough to buy Robinhood back then. They were losing so much money. And I've taken so much profits on Robinhood, I barely have any shares left, but I still have 5 shares and I'm up 577% on them. Here's the thing. If you're like, dang, that's good, but here's how long I've been holding the stock for. You ready? This is why you don't listen to me. I literally bought Robinhood on their IPO. It should show me. Yeah, look, here's where I bought Robinhood. 2021. All I had to do was wait for 4 years, 5 years, and then the stock finally goes up. But anyway, kind of like SoFi as well. I bought SoFi years ago. Let's see. I bought SoFi, I think it was, right around here. It's not, anyway, it doesn't matter. This is what I'm trying to say. You just got to buy and hold your stocks for the long run. You know, some of my biggest mistakes were selling my winners, selling my winners to buy losers, So sometimes let your winners win is what I'm trying to say here. I, of course, have a bunch of losers like UiPath, Zoom. We've taken like a lot of losses on ChargePoint, losses you can't even see on here. I've made videos about them. I just like being fully transparent, by the way. I don't sell nothing. I don't have a course, a book, a Discord. I'm literally just on here giving my opinion. The only way to support me, if you do want to support me, is just subscribe to my YouTube channel. My YouTube channel is called Nathan Robert. It's also in the link tree in my bio. Yo, Noah said Fairy Oval SE. Is there a ticker symbol for that stock, Noah? I don't know how to find that one. What was the other stock you recommended before Adobe? Ooh, yo, I think it was PGR. I think it was Progressive. This was the insurance company. Progressive, they do the special dividends every year because they make so much money. So someone said, oh yeah, NOTE stock. So let's see. Fiscal Note Holdings. Yeah, very risky. If you look in the top right, $118 million company. So that's just a super small market cap. It's just hard to really like trust money in there. So they're only worth 100 million. And yeah, look at this. The revenue's down 15%. And they're losing net income as well every quarter. That's not good. Did they sell an asset? They did. That's why. That's why the losses were actually worse than that. Yeah. So they've been selling assets to. That's how it was net income positive. Yeah, this is not a company I'd want to own, but they have been doing good the past couple of days. So congrats if you made money on this one. But nothing's really blowing me away there to really want to buy that one. I'm not seeing any growth or nothing. Nathan manages my portfolio. No, Teddy. What's up, dude? Hope you're having a good 4th or 3rd of July. Hey, tomorrow should be fun. The market just closed 4 minutes ago. Wait, hold on. We missed it. Yeah, the market closed early today because tomorrow's 4th of July. So I guess today's closing early. But yeah, the market just closed. We were up 0.65% on the day. Yeah, how'd y'all do on the day? Here are all my this is my dividend growth portfolio. Every stock in here pays a dividend. And yeah, look at that. The SPY's up 0.81. NVIDIA's up 1. Q's. Actually, some people are asking about my dividend income. I'll show you that real quick. If I go to dividends right here, here's the past 30 days. This is one of my better months. I received a bunch of dividends this month. $3 from Maine, $3 from Meta, Google. I got a $23 dividend from McDonald's. Hey, thank you, McDonald's. I can go buy some Big Macs or something with those dividends. So I love dividend investing. And they pay qualified dividends. So even in my taxable account, it's tax-free. Yo, user Gordon said he subscribed to my YouTube channel. Yo, I'm going to give you a follow, dude. I really appreciate that. If y'all don't know, by the way, this TikTok account that I'm on right now, before 2-3 days ago, it was permanently banned for 2 weeks. My account was literally permanently banned for 2 weeks. You looked it up, it didn't exist. And then they gave me an email 3 days ago that it was unbanned. And so I'm so glad to be back, but I'm scared it's going to get banned again because it literally got banned yesterday. Or the live got taken down. I didn't get banned again, but the live got taken down. But anyway, please subscribe to my YouTube channel. It's called Nathan Robert. It's in the link tree in my bio. I stream on there every day as well. I'm streaming on there right now. So if you missed anything and want to replay it, you can go on my YouTube channel. Nathan Roberts, also in the link tree in my bio. Anyway, let's get back to the stock analysis. Sorry for the rambling. Here's Oracle. Dude, this is a huge cloud play. The Oracle cloud business has exploded. And look at that. This stock's at an all-time high today. Yo, congrats if you own this one, dude. This one has been crushing it. And even if you buy the stock right now at all-time highs, you still get a decent yield, 0.7% dividend yield. Hey, nice. But yeah, what's the... look at that. The cloud and license revenue is 85% of their business. So yeah, that's pretty cool. And here's the best part is the bottom line here. Look at this net income they're making. They're literally making $3 billion of net income every single quarter. Yo, Alex, I'm going to follow you too. Thanks for subscribing to the channel. But yeah, look at this net income. They're literally making $3.5 billion of net income every quarter, and it just keeps on growing. So extremely profitable company. They're doing buybacks. They're innovative. They're partnering. They're cloud. Investors love this stock. So yeah. TMC analysis, please. Yo, I can't do any analysis on this one. The reason the stock has been going up so much is basically because they issued a bunch of shares and rose a bunch of cash. So they have a lot more cash on hand than before. But this is a startup, and what they're trying to do, and I used to own this company. I used to own a lot of this company, like in 2022, a long time ago. But this is a startup. They have no revenue. They make these little robots that go in the ocean and suck out the nickel and copper from the water and like gold and stuff. But they have no revenue yet. This is a startup. So if you go to the revenue right here, it says no data because they've never sold anything, not a product or service, and they're losing 20 mil a quarter. So they haven't like successfully done anything yet. They have more liabilities than assets. This is why it's so good news that they just rose a bunch of cash. Look at that. They have more liabilities than assets. That's going to change. They're going to have more cash and assets than liabilities after today, which is good. But we want to see them hopefully start to finally make some revenue. So someone said Snowflake. This is the Palantir competitor. So yeah, this does exactly what Palantir does. But there's some really good news and really bad news about this company, and I'll share that with you. And I also have some bad news that this hotel, I'm at a hotel right now, by the way. I still wanted to stream. The Wi-Fi is bum. It's not working too good, but I appreciate y'all being here anyway. So here's Snowflake. And if y'all want to hit the follow button, we go live every day. So here's Snowflake stock right here. We'll be live even tomorrow on the 4th of July. if I have the time. So here's Snowflake right here. Here's the good news about this company. Well, here's why I really like this stock. It's this revenue growth. If we go to it on an annual basis, I mean, what other companies doing this? You know, for the full year 2020, it was 250 million of revenue. Now for the this is fiscal year. So fiscal year 2025, it was 3.5 billion. Basically just incredible growth. We can see it on a quarterly. It's up 27% year over year. But here's the bad news. And this is why the stock's kind of been struggling compared to a Palantir since its IPO. They're losing a lot of money right now. Look, because of their stock-based comp. They pay a lot of their employees with stock, and that's a GAAP net income loss whenever they do that. It's not included in free cash flow. So if we go to the FCF right here, you know, they're making a lot of free cash flow, but it's net income negative because of the stock-based comp, and it's not really getting better. We want to see this trend start to get better. So I'd be careful with that one because of the net income losses, but I love the growth. It's incredible growth. Incredible. User 213 said, thoughts on JD? Hey, Adrian, how's it going? How's Q? Yo, we'll check that one out. Remind me to look at QBTS. So this is let me go to the Chinese watch list right here. I think we have one. Yeah, the Chinese tariff tech right here. So yeah, let's see what's in here. Oh, the DeepSeek AI beneficiaries. I see that too. But yeah, my favorite Chinese stock is honestly Tencent and Alibaba, but then there's JD down here, JD.com. Let's go check them out, actually. Oh, and here's another cool thing about this app. It's telling me there's some technical analysis. What is this? A bullish continuation wedge in the rise probability is a 95% chance. You know, I didn't draw that, but whenever there's like a technical analysis thing, they like draw it for me, which is cool. That's what's cool about this app. But this is a Chinese company. I like looking at it's cool to look at the technicals, but you also got to look at the fundamentals. So let's go check them out here. So the PE is a 7. You know, that's really cheap, 7 times net income. Oh, we get some KPI data. Let's see. Active customers, they have 588 million annual active customers. Hey, that's a cool stat there. And look at, actually, this is great. Look at this. This is incredible. They're making 1 to 2 billion of net income a quarter. I mean, this is great, and it's growing. It grew 52%. What the revenue grow? Revenue grew 15. So this is a huge margin expansion story. That's great. So I like them. Where do you buy Chinese stocks? Yeah, you can do it on this app right here. If you want to get this app I'm on, it's called Moomoo. If you want to get it's really a brokerage. If you want to get the brokerage I'm on, it's in the link tree in my bio. It's the very first link there. You're able to buy Chinese stocks in there. You can buy every stock. Yo, no way, Brad. Thanks for all the roses. He gave me 20 roses, dude. Thanks so much, Brad. I really appreciate you, brother. If you got a stock you want me to look at, let me know. But yeah, that was, I didn't mean to be too bearish on your Snowflake stock, but thanks again for all the roses. If you got another one you want me to look at, let me know. Thanks so much. Hey, yeah, you know what? Since we're on Chinese stocks, let's look at BABA. Or can we go back to the watch list right here? Yeah, so we go back to the Chinese tariff tech watch list. Yeah. AliExpress, this is like the Chinese Amazon. If anyone's heard of AliExpress before, they're probably volatile with all the tariffs right now. But here's the good news about this company. Yeah, they are Chinese. They're an ADR. But yeah, if we go down here to the valuation, you know, low valuation like all the Chinese stocks. They trade at 15 times PE. So very low valuation on that company. Let's see. Active customers over here. They got 903 million annual active customers. A bit more, like double what JD has. And this is the best part about Alibaba. Look at this bottom line. This is in US dollars as well. They're printing money, you know, 6 billion, if you average out the 4 quarters, they're making like 4 billion of net income a quarter. So, and I think they even just started paying a dividend. Yeah, you get a 1% yield and only a 13% payout ratio. So yeah, they're a shareholder friendly company. All right. Let's see. Do ONDS, please. All right, well, we'll check out ONDS. I think this is a small cap. We'll check it out. So, yeah, we'll look at Johnson & Johnson, too. This is a $300 million company, very small market cap. So, they're worth 300 mil. Let's see what they do. So, Ondas Autonomous Systems. So, hey, they're actually starting to see a little bit of growth in their revenue. Check that out. I mean, it's still really small, like, yeah, look at that, 4 million of revenue, but that 4 million of revenue grew by 500%. But wait, that's after being down 75%. So, I mean, it still looks pretty risky. I mean, they're doing 4 or 5 mil of revenue a quarter, and they're losing 15 mil. They're losing 15 mil a quarter, and the whole company's worth 300 mil. I'd just be really careful with that one. I got to do some more research on them, but I'd be careful. It is not too terrible. So yeah, someone said J&J, Johnson & Johnson. I remember they acquired Shockwave. Oh, hey, there's more. What is this right here? Let's see. Bullish symmetrical triangle Rise probability is a 95. Okay, that's interesting. But Johnson & Johnson is a great dividend play. Check this out right here. Look at this yield. You get a 3% plus dividend on this company. So that's what a lot of people like is a nice dividend. The PE is very low, the 17 PE. Where's the net income? Oh, that was a one-time adjustment. Here's what they're actually making. Johnson & Johnson's usually making like 6 billion of net income a quarter. So, Johnson & Johnson is huge. They own so many billion-dollar brands. So yeah, I think that's a nice buy and hold for the long run. This one just has, ever since that lawsuit they had, I forget what it was, the lawsuit, but it could cost them like 10 bill. So the lawsuits have been hurting them, their stock price, but I still like them. They have, yeah, 3% plus yield. Great. Um, all right, let's see. What do you think of Uber and the future of robotics? Yeah, dude, I love Uber stock. They just acquired 14% of Grab. Look at that. Uber's at an all-time high today. So congrats if you own Uber. You got to be up on your position. The best part about Uber is the growth. I didn't know Uber had so much growth. I'll show you this real quick. But look at the monthly active consumer is 170 million. So they got a lot of monthly active users. But yeah, their mobility business, look at this right here. Mobility revenue grew 15% year over year. So very solid growth. And the delivery revenue, like Uber Eats, that's up 18% year over year. So Uber has seen some very nice growth, but not just of the top line sales, but profits. I mean, look at this FCF, which is free cash flow. They made 2.3 billion just in the most recent quarter of free cash flow. And net income is really good as well. Look at that. It's over like $1 billion a quarter now. So Uber's finally profitable. They just took a huge stake into Grab Holdings. And if we go to Grab right here, Grab is literally they do exactly what Uber does, but in all these other countries. So this was genius for Uber to do. It instantly gives them international diversification. Look at this Grab. Look at where all the revenue comes from. Indonesia, Singapore, Philippines. And if we go to the largest shareholder of this stock is literally Uber. And then it's Toyota Motors. They own 5%. But yeah, Uber owns 13% of this company. So 13% of the free cash flows go back to Uber stock. I think it was genius. Thank you for sharing your opinion on J&J holding a few shares in the long run. Hey, nice. Yeah, I think that you get a nice dividend on that one too. Let's see. Dave said AMD. Yeah, we'll check out AMD. I'll be quick about this one because we just looked at that one. Oh, remind me to look at MVST. We're looking at MVST. Why did the market close early? Because tomorrow's 4th of July. The market's actually not open tomorrow. So the market's closed tomorrow. And I guess for whatever reason, they decided to close the market early today. So here's AMD, though. I do own this one. I might be a little biased, but here's what I love about them. Huge GPU market share, 16% market share. Pretty nice. But I really like AMD as a data center growth play. Check this out right here. The data center revenue is up 57% year over year. So incredible data center revenue growth over here on AMD. And also the profits, the FCF is up double. The net income's up 4x. They have no net debt, really good balance sheet. So I personally like AMD. I might be biased though. I own like 12 shares. Hey, Brad, thanks again for all the roses. No way. Brad sent another 30, 60 roses. No way, dude. I really appreciate you, man. Hope you're having a great day. Yeah, happy July 3rd, July 4th. Oh, yeah, NVTS. Yeah, so, oh, no way. MB is a recent IPO. Yo, Oskeo, are you still here? I'll look at that one. I got you. And oh, yo, Jeff Mackey said Circle. Yeah, dude, Circle. We'll look at that one too. So here's Nvidia Semiconductor. This company basically just got saved by a huge partnership. Yeah, no problem, Brad. Thanks for all the roses. Yeah, hey, I don't sell anything. I don't have a course book, Discord. I'm literally just on here giving my opinion, so I do appreciate that. If you want to help me out, though, the only way to support me is to subscribe to my YouTube channel. I'm streaming on there as well. YouTube channel is called Nathan Robert. It's also in the link tree in my bio. Yo, Yardot. No way. Yardot gave me 22 roses. He said, BMNR. I got you, dude. We'll look at that stock next. Thanks again, dude, for all the roses. I appreciate that. So here's Nvidia Semiconductor. This company basically got saved by NVIDIA. NVIDIA took a stake in the company, I believe, or there was a huge partnership with NVIDIA. And before today, the stock was at an all-time low. So before that partnership, this company was literally going to go bankrupt. Look at that. They were $2 before the partnership. And here's why. If we go to the financials here, and again, this is all going to improve in the future thanks to this NVIDIA partnership. But look, revenue's down 39% year over year. And if you go to the net income, they're losing net income every quarter. So this NVIDIA partnership saved the company so much. So that's great news. So BMNR, thanks again for the 22 roses, man. So and you too, Brad. So here's Bitmine Immersion Technology. So yeah, there's some good news here today. I think they got halted today. But I wonder was there any specific news? I don't know, but this is a Bitcoin mining company. I believe they're up 100. Oh, the market closed But yeah, if we look at that revenue from self-mining, so yeah, this looks like they mine Bitcoin or maybe some other weird coins. Yo, Brendan, thanks for following the YT, dude. I'm gonna give you a follow. Thanks so much, dude. Um, and yeah, let's see. Yeah, there's not too much uh, history we can look at here. I mean, they're losing barely any money, like 1 million a quarter, which is nothing. Free cash flow. But yeah, this is basically a Bitcoin mining company. I wonder why they went up so much today. CRCO. So yeah, here's Circle right here, dude. Circle, this is the stablecoin issuer. Now that since we're talking about Bitcoin, this company right here owns USDC. If anyone's heard of USDC before, it's like a stablecoin, really popular crypto, and they're like the issuer. They own that and everything, which is cool. And yeah, they have crazy growth. I mean, there's not too much history, but look at that revenue growth, 500 million in the most recent quarter, up from 30 million. If we go to net income right here, they're actually profitable. In the two most recent quarters, they made 60 million, 50 million. I mean, Circle, they're finally profitable. So yeah, it's tough to give this one a valuation, but I need to see more history. But Circle, they seem like a really interesting company. I think they even partnership. I think they had a partnership with MasterCard even. I don't remember. Let's see. Yo, what's up? Yo, Jesse Collins. Hope you're having a good, 4th of July. Happy 4th. Yeah. Happy 4th, everyone. Appreciate y'all. QBTS did good today. Let's see. This is what the quantum computing stock. How's it going, Adrian? D-Wave Quantum. Or I think people call it qubits. But yeah, look at that. They're up 5% on the day. They absolutely did good today. Probably just because the market's at an all-time high. This is a huge momentum play. There's a lot of momentum in D-Wave Quantum, and they move with all the quantum stocks. I can actually show you the quantum watch list if y'all want. Let's see. Yeah, here's all the watch list. Robo-taxi race heats up. Where is quantum? I think quantum might be way at the bottom here. Yeah, quantum computing. My favorite quantum stocks, of course, are like a Google and IBM and Oracle, because these really have the money and the talent to be the industry leaders. Like Qubits, they do like 15 mil of revenue a quarter, which is expected to grow. But these are some of the more pure quantum plays that have a lot of momentum, like the RGTI, QUBT, Qubits. So yeah. Let's see. Thoughts. Ticker symbol X, US Steel. Isn't that US Steel? Delisted. What the? It says delisted. Did they get acquired or something? Yeah, look at that. Or I don't know. I think they got acquired. I don't know. So let's see. NBIS. Is that Nebius? NBIS. So yeah, this is Nebius. So I think Nvidia owns this company. We'll go check after this. Let's go check out the revenue here. So 58% of the revenue comes from Nebius, then Triple 10. Where's the revenue come from? So half from the US, half from the rest of the world. What's the growth? So wow, I can see why people like this stock. This is some incredible growth. Look at that. Revenue was 11 million last year. Now it's 55 million, up 400%. If they can keep up that growth rate, that's incredible. Let me actually go check Nvidia's portfolio real quick, because they got to make that public. Nvidia's portfolio. So yeah, of course they own CoreWeave, ARM, and yeah, look at Nebius. That's their 4th largest holding, Nebius AI. So hey, Nvidia owns part of that one. Oscar Health. Hey, what up, Kevin? So OSCR, this is the company. They're in Medicare and Medicaid, and basically the government came out a couple of days ago and we're like, we don't want corporates profiting as much from this. So it sent the stock down, but I don't know what that'll do to their financials. So the future is a little bit more uncertain than what it used to be. But here's the great news and why I really like Oscar. It's this growth. So look at this. In 2020, the full year, 600 million of revenue, really good. But look at it now. Went from 600 million to literally 9.2 billion for the full year. And literally just in the most recent quarter, it was over $3 billion. So incredible growth on Oscar. They're taking market share. They're still struggling to get net income positive, but the net income did just grow 55% from the previous year. So I like this name actually, but you got to take in the uncertainty of all the healthcare shenanigans from the government. But yeah, the fundamentals, the growth is amazing there. I had USDC for 2 years, and so yeah, USDC, that thing doesn't really go up or down in value. So I see why you sold it. Isn't this stock at like a 97 PE? Yeah, that's because they just got profitable. So yeah, that's because they lose net income the other quarters. The PE is just the net income per share multiple. And whenever a company just gets profitable, the PE gets super high. because they went from negative, because they went from a no PE, a negative PE to finally a positive PE. So you really got to look at the forward PE 2 years out or something for those super high PE stocks. So here's Big Bear AI. Look at that one. They've done really good the past couple months here. Check that out. They're up 2% on the day, but they've had a great week. I wonder why. Or maybe just momentum. They're in cyber and engineering. Let's see, revenue. They got some revenue, 30, 40 million a quarter. They are losing quite a bit of money. Wow, they lost like 200 million the past year, and they're worth so they lost like 10% of the market cap in net income. But I don't know. This is a huge momentum name right now. I don't know what cyber and engineering. They're doing 40 mil a quarter. Does anyone know any good defense stocks to invest in? I'm 17. Yo, GE Aerospace. Here, I'll show you one I really like. LMT. Yo, SAQIB. He said, "What app is this? If you want to get, it's actually a brokerage. If you want to get this app, it's in the link tree in my bio. It's the very first link there. If you want to get this platform I'm on. But here's Lockheed Martin. Here's a nice little defense play if you like dividends as well. Actually, I'd probably pick a different one for you. So this one has a 2.8% dividend yield. So it has a bit of a higher yield. And look at where the revenue comes from. Aeronautics, rotary mission systems, missiles and fire control, and then space. So I love how, first off, just diversified their revenue streams are. Another one, probably my favorite pick, is probably an RTX. I think Raytheon just got a deal today. But yeah, this is RTX right here, Raytheon. Probably the best technology out there. Look at that. So Pratt & Whitney, Collins Aerospace, and then they own Raytheon, which is a great business. So yeah. Big Bear AI going crazy when earnings come. Hey, what up, world? How's it going, dude? What's your favorite semiconductor stock right now? I probably since all of them have done very good right now, so it's tough to buy any of them. I do personally own AMD, so I will say that. I got 12 shares of AMD, but I really like a Taiwan Semi right now, Do you play stock options? Not really. I mainly just buy and hold great companies for the long run. But anyway, here's Taiwan Semi right here. The stock's at an all-time high right now, and a lot of the semiconductor plays are at close to all-time highs or a 52-week high right now, so it's tough. But here's why I probably wouldn't mind buying Taiwan Semi at all-time highs. First off, the PE is decently fair. A 27 PE. That's not crazy overvalued. And look at their market share. For their 5 nanometer, their wafer chips, it's huge. It literally went from 61% last year to a 67%. So they're growing their market share. But best part is the bottom line. This is in US dollars, of course. They're making literally 10 billion a quarter. 10 billion the most recent 3 quarters. So this is incredible. And great news, if you're a dividend investor, even if you buy this one close to an all-time high right now, you get a 1% yield. So you get 1% of your money back in a dividend every year. And with NVIDIA, there's no dividend on NVIDIA, none on AMD. There is one on Broadcom. That's pretty good. So yeah. Y3 said, "What? Yeah, if you want to get this app I'm on, it's in the link tree in my bio. It's the very first link there. It's actually a brokerage. But yeah. You can see there's a lot of cool stuff. You can view all these watch lists right here, like the ceasefire, NVIDIA's holdings. You can see Nancy Pelosi's portfolio, aerospace watches, all the stuff in there. And I love just all the analysis you can do. Like someone said, Apple, hey, that's a perfect stock we can analyze. So here's all the features I love about this app. The semiconductors are overpriced right now. Yeah, that's what it's looking like. So here's Apple right here. Here's what I love about this app right here. Look at these metrics we get. We can see Apple's smartphone market share. They actually have a 19% smartphone market share, which is pretty cool. But we can see where their revenue comes from. 50% of Apple's revenue literally comes from their iPhone, the best product they'll ever make. I'm on an iPhone right now. A lot of people are locked in the Apple ecosystem. So half the revenue comes from the iPhone. Then they have the services revenue. Whenever you go buy something in the App Store, they actually take a 30% fee and take a lot of high margin fees and royalties. So then they have the Mac, the wearables, and the iPad. But here's why Apple was so affected by tariffs. It's because, look at that. Did you know only 36% of Apple's revenue comes from the US? Then 25% literally comes from just Europe and then China. So that's why they're so they're internationally diverse. Even though they're based in America, they're really an international play. But yeah, if we go to the net income right here, they're printing money, 20 billion of net income a quarter. So I really like Apple as just a buy and hold for the long run play. So yeah, that's a stock. Yeah, you just want to probably buy and hold. Let's see, MVST, is that a Microvest? So yeah, this is the company that's been really crushing analyst expectations. So check this out right here. They're still a small company. Let's see, a $1.1 billion company. So not huge. Yeah, really a $1 billion company. But check this out right here. You look at the orange line. This is what the analysts were expecting. The analysts were expecting 106 mil. They reported 116 million of revenue, but the best part is actually the net income. Analysts were expecting them this quarter to lose 2 cents of EPS. They were expected to lose net income, but they actually made net income. They made 19 cents of EPS or 61 million of net income, which is, which is great. Analysts weren't really expecting that. So 43% revenue growth, and they made net income. So just great news for Microvast. No analysts were really expecting that, and I think that's why stock jumped up so much on earnings. Nathan, you sound like a sharp investor. Hard to find it on here. Yeah, dude. I literally just I'm just an honest. I don't sell anything. I don't have a course, book, Discord, WhatsApp, Telegram. Watch out for people impersonating me. I don't sell anything. Only thing I have is a YouTube channel. If you want to help me out, best way to support me is subscribe to my YouTube channel. It's called Nathan Robert. But yeah, I literally just try and give you my honest thoughts. I like showing you the numbers for yourself so you can draw your own conclusion. I like looking at the fundamentals of a company. I don't just, yeah. What's the name of this app? Yeah, hey, Chris, this is actually a brokerage. If you want to get this app, it's called Moomoo. It's in the link tree in my bio. It's the very first link there if you want to get this software I'm on right here. Yeah, it's my favorite app right here for analysis. I keep my cash in here. Like if you look in the middle of my screen, I got a lot of cash and earns you daily interest on here. So it's like the all-in-one investing app. I love it. So yeah, link tree in bio, first link there. So let's see. Is VF a good buy? So is VF Corp, I think he's talking about. So yeah, this is the company that owns the North Face, Vans, if anyone heard of Vans, JanSport. And this is huge news. The company just had to sell Supreme. Does anyone remember Supreme? It was like that hype beast brand. So if we go, to the cash from investing activities, we can see they just received last quarter a huge $1.5 billion of revenue. That's because they sold Supreme for $2 billion. There was another $500 million income, but basically they sold Supreme for $2 billion to try and deleverage. They're super leveraged. They're paying a lot of negative debt, which sucks. And they were just losing money. Like, how does this happen? Boring company like the Vans, North Face, they used to lose, look at that, 400 mil a quarter. They were losing a couple hundred mil a quarter, but now looks like they finally turned things around. They're starting to lose less. But I'd still be careful with that one. The apparel business isn't great right now. Like, honestly, if I was looking for an apparel stock, I'd buy LVMUY. This is Louis Vuitton, Moet, Hennessy, Dior, all those brands in one. And this stock's also on a dip right now. And I really like this one right here. So this is LVMUY stock. Look at where the revenue comes from. This is what I love. It's not just one brand. It's not just Nike. It's not just Lululemon. But look at this. Fashion and leather goods, half their revenue, like the purses. But look, then they're in watches and jewelry. That's a high margin business, watches, jewelry. Then they're in perfume, cosmetics, another really high margin business. Then they're in spirits. So I just really like this company. And for the full year 2024, they made 13 bill of net income. I mean, incredible. So yeah, then they traded at a low valuation. Louis Vuitton trades at 19 times PE. So they're a France stock. So you might have to pay a little bit of foreign ADR fees. I think, I don't know. Just a little hint for all you with XRP. Only around 2 million people globally have XRP. You would expect it to quadruple. Hey, what up, world? Hey, yeah, I heard a lot about. Do you think we can see a lot of upside with Meta? Yo, we'll look at Meta as well. Let me look at Starbucks real quick. So yeah, here's Starbucks right here. This, they just sell coffee. This stock has been flat since 2019. They're the same prices they were back in 2019. So the stock has been flat for a few years. They did just get a new CEO, Brian Nickel, which is really cool. He used to be the previous CEO of Chipotle. So the old CEO of Chipotle quit to become the Starbucks CEO. So when you see their number of stores, they have 40.8 thousand stores, which is really interesting. They've been trying to grow their China numbers. Dude, okay, there we go. Where's China? Yeah, so China's 9% of the revenue. Okay. And beverages is 60% of the business. If we go to the net income right here, this is why Starbucks has been struggling and probably why they're flat on the 5-year. Their margins have kind of just collapsed. Their net income is down 50% year over year, and it was only $384 million. Did that afford the dividend? So that net income made 34 cents of EPS. And what the dividend cost 61 cents. They actually could not afford the dividend in the most recent quarter. So their dividend cost roughly $700 million a quarter, and they only made $380 million. It's not great. But I know 2.5% yield, the dividend still, that was hopefully a one-time quarter. All right, let's see here. Oh, yes, Meta. So I do own Meta as well, dude. I love Meta. They just announced like a week ago that they're going to start introducing ads to WhatsApp. So that's an earnings tailwind. it's instantly just going to make them more money, instantly make them more net income. They've been looking forever to try and monetize WhatsApp. As you know, they own Instagram, they own Facebook and WhatsApp, and they have made no money from WhatsApp. And now they're finally going to start making money. So that's a good news. Look at these active users. This is nuts about Meta. You know, 3.4 billion daily active users. So basically half the world is on one of Meta's apps every day. And here's the other great news, just incredible growthy company. The revenue grew 16%, so pretty solid growth. Revenue grew 16% year over year, but the net income grew 34% year over year. So that means they're growing their net margins. They now have a 40% net margin. You go spend $100 on Instagram ads, $40 of that is after-tax profit for Meta. They're printing money. Huge digital advertising play. You know, 40% net margin on a $2 trillion company. I mean, that's nuts. So anyway, I do like Meta, and I do own them. Here, I'll show you. Here's my dividend growth portfolio. Whoa, something just jumped up after hours. Maybe we can find out what that was. But anyway, if we go to Meta right here, I do own this one. We're up 36% on them. They're one of my fave Mag 7 stocks. I trust them almost a little bit more than Google. Yeah, I get a little bit of dividends. I bought another share at $644 in May. But yeah, we get a little $2.60 dividend from Meta. Anyway, great margin expansion, great growthy company. But yeah, how did our Roth IRA do on the day? Hey, we're up 2.4% on the day in here. Nice. Yeah, this is our. Oh wait, we're at 25,000 now. I think that might be. I don't know if this is real. That probably was like one share traded. What do you think about Zuck approaching the AI people from OpenAI? Yeah, dude, Zuckerberg is making like a super intelligence team, and it's gonna. And the stock likes it. It's going to cost them like $1 billion a year though of stock and everything, but it's worth it. Market doesn't care. HCTI, please. Yeah, what up, Chris? How's it going? He said this stock, healthcare triangle. So this sucks. They're a penny stock. Look in the top right. This is what's so risky about this company, and I probably wouldn't even touch it. If you look in the top right, you see market cap. This whole company, the whole entire company is worth $10 million. So that right there is extremely risky. So the whole company's worth 10 million, and look at this. They're losing $1 million plus of net income a quarter. Every time they lose $1 million, that's 10% of the whole company. You know, that's really bad news. So that's what I just couldn't. There's such a small company. I don't think I could buy that one. I want to see the revenue. By the way, I'm at a hotel right now, and for some reason, the hotel Wi-Fi is just absolute trashed. And I don't know, man. Revenue, okay, yeah, look at that. Revenue fell 10%. The revenue's only $3 million. So yeah, nothing's really blowing me away that I really want to buy. That could be a fun swing trade though. Hey Jello, how's it going? Happy 4th of July. How are you? Thinking about buying HIMS. Do they come back soon? Let's go check it out. Hey, let's check it out, Danny. So HIMS. So there's some good news and bad news. They had a partnership with NVO. They had a partnership with Ozempic, which is owned by NVO, and then NVO accused them of fraud and stopped their partnership, and that's why they gapped down this day. This is the day that NVO or Ozempic stopped their partnership with HIMS. But here's what I love about HIMS, and this is incredible growth. I mean, the revenue grew 112% year over year. I mean, that revenue growth. Hang on. Okay, yeah, so incredible revenue growth right here. The revenue literally grew 110% from the previous year. I mean, that's incredible growth, but the future's a bit uncertain. And it's not just the revenue growth, you know, it's also like the profits here. Like if we go to the free cash flow and net income of this company, it's incredible. It's incredible, but you can't see it because the hotel Wi-Fi is trash. There we go. FCF free cash flow, 50 million of free cash flow in the most recent quarter. Net income was also 50 million. I mean, the net income has exploded. It's up 340% from the year over year. So it's just great growth. So, and they have no debt. This is a great balance sheet company. So, yeah. HIMS, the bad news is they lost their partnership with NVO. And so I don't know how that's going to affect the future of earnings. But let me go look at NVO for you. So here's NVO right here. This is the company that was partnering with HIMS. And yo, what up, Jeff Mack? Yeah. So this is the company that owns Ozempic. This is the weight loss company. And if we go to what most of the revenue is, look, 95% of the revenue is their obesity care products, which, they literally own Ozempic. So that's what that's from. And the profits they're making right now is incredible. Look at this. They're literally making 4 billion of net income a quarter. So incredible net income growth here. And if we go to the dividend, you get a 2.3% dividend here. The bad news is the patent for Ozempic, their Ozempic patent does expire in 2027. So that is one thing you got to be careful of. So Osco said, check out ticker symbol MB Master Beef. They recently IPO'd. So yeah, checked out this company right here. They did just IPO. They're only worth 140 million. So a very small company, 140 million. But let's see. Oh, so look at that. They're a HKD. Is that Hong Kong? I don't know what country that is. Anyone know what HKD is? But anyway, let's see. Catering income. So yeah, they're a catering business. They probably just have meat and stuff to give you. Let me just read that. So they're only 100 million. Yeah, Hong Kong, China. Yeah, small company. So established multiple brands, noodles. So that's cool. I'd be careful with that one. I want to see some more revenue. Yeah, let's see where the revenue comes from. Yeah, look, 100% of the revenue comes from Hong Kong, none from the US. So that's good. Full year 2024, they made 4 million of net income. And hey, if they traded $100 million market cap, they made 4% of the market cap in net income. Fluffy said, is there any stocks for robotics? This is one I've been pitching, but unfortunately, they're up 13% today. I've been talking about this stock for a long time. Whenever someone says any robotic stock like Rich Tech Robotics, I'm like, nah, forget that stock. Check out SYM. And they're up. They've been doing great. They're up 14% on the day. So unfortunately, it's tough to buy this one now. But this is my favorite robotic stock. Also, Amazon. Amazon is probably the best robotic stock, but it's not a pure robotics play. But they are the largest robotics company in the world. But yeah, look at this company's growth. It's up 39% from the previous year. So this is just a growthy company with real sales, real patents, real IP. The revenue's up 39% from the previous year. If you look at the net income, they're finally getting super close to net income positive. They did make net income 2 quarters ago. They used to lose a lot more. So everything's getting better. They're just a growthy company. It's Symbiotic. They're a warehouse robotics company. So yeah. Thoughts on Grab? Hey, Luffy, how's it going, dude? So Grab Holdings, this is the company that Uber took a huge stake in. I think that was genius. Uber decided to take a stake into Grab. So Grab, if you're wondering what is this company, they do exactly what Uber does, but in all these other countries. So check this out. Notice the US isn't on here. They're in Indonesia, Malaysia, Singapore, Philippines, all these other countries right here. And they do exactly what Uber does. So if we go to the largest shareholder right here, check that out. 13% of the stock is owned by Uber. So yeah, and they're now net income positive, making net income every quarter, which is great. The free cash flow is starting to explode. So Grab Holdings, they're cool. LAES, is Seal SQ Corp. I think this is another quantum play. So this is just a quantum momentum company. I don't know if they have any financials. So yeah, $460 million company. Do they have any revenue? So yeah, look at that. They're worth $460 million, and the revenue for the full year 2024 was $10 million. So they're doing $2.5 million of revenue a quarter. I mean, it's just not great. And they lost $20 million as well, which is wait, that's 5 or 10% of the company. Oh well, I'd be really careful with LAES just because they're a small cap, but they move with all the momentum quantum names. DDOG, hey, this is Datadog. This company got added into the S&P 500 today. So check that out. They're up 15%, literally just on the news that they're added into the S&P 500. So whenever you go buy a little bit of the S&P 500, now a little bit of that money is now in this stock. And so they're just going to receive a bunch of passive inflows into the company. But let's go check out the fundamentals here. This is a cybersecurity play. Go to the revenue right here. They've just seen some really nice revenue growth. It's up 25% from the previous year. So really good revenue growth. It hits a new record every quarter. And they're net income positive. It did fall a little bit year over year, but that's all right. But yeah, they are net income positive every quarter. The free cash flow is crazy. 200 plus million of free cash flow quarter. So that's an interesting one. Hey, thanks for the follow, Wolf Eyes and Data Shadow. Yeah, if y'all wanted the follow button, we go live every day, twice a day. We just look at stocks and stuff. And I don't sell anything. I don't have a course, a book, a Discord. I don't got nothing. Just on here, give my opinion. We're just looking at stocks. Yo, Poet, what's up, dude? He said hi from Poland. Yo, nice to meet you, dude. So here's Robinhood stock right here. I do own this company, and I have a Robinhood portfolio. Hey, I'm a customer, so I'm giving Robinhood some fees. But here's what's so great about Robinhood. I mean, they're just growing like crazy, and people are really starting to take them serious. If you go to the net income right here, look at this. They're making literally hundreds of millions of net income every quarter now. Because if we zoom out, they used to lose hundreds of millions in net income a quarter. So Hood has just really grown their net income, their profits, they're profitable, and their revenue's up 50% year over year. So Robinhood is just a great growth company. They just released new products for the EU where you can invest in OpenAI and SpaceX if you are in Europe. They're just an innovative company. Let's see. RKT stock. Is that Rocket Mortgage? So yeah, here's Rocket. I think half the let me go check this. We can see the short position. Short, yeah, the short interest, no way. So yeah, look at that. 43% of all the shares are being shorted right now. So for some reason, the short interest, yeah, you can kind of see it's exploded recently. So I do wonder why a lot of people are shorting this one. But probably because of the high interest rates. But let's go see. This is a mortgage play. If we go into a lower interest rate environment, this company's gonna just see a lot of growth. But yeah, if we go to net income, it's a little choppy. Like they make net income, then they lose net income. But overall, they are making net income. So that's great news. Direct to consumer, how's that doing? Are they beating expectations? According, do we have? Yeah, here's the analyst. Yeah, they beat on revenue, missed on net income. Anyway, yeah, I like Rocket Mortgage, especially going into a lower interest rate environment. I do wonder why half the shares are being short, though. Yo, Skirb said LPSN. What's this one? LPSN. Live person. Hey, yeah. Rocket going on my watch list as a short squeeze candidate. Hey, yeah, that is interesting, Jeff Mack. So this is a $103 million company. So dang, look at that. Stock's at an all-time low right now. So $100 million company, hosted services. Where does their revenue come from? US, Canada. Are they? Yeah, so look, the business is just declining like crazy. That's probably why the stock's at an all-time low. I mean, they're just not growing. Actually, they're declining. The revenue fell 25% from the previous year, so not great. And if we go to the net income, it's really choppy. Dang, look, they lost $100 million just last quarter, and the whole company's worth $100 million. So yeah, I could see why they're at all-time lows. They're losing a lot of money. Let's see. RZL. This looks. I'm gonna assume this one has a small market cap. So Resolve AI. What's up? What's up? Celebrate. So a $700 million company. Yeah, another really small company, close to an all-time low. What do they do though? For the full year 2024, they lost 172 million. So the revenue is only 100,000. So they did 200,000 of revenue and lost 170 million for the full 2024 year. So I can see why this stock has just not done good. They're only worth 700 million. So they're worth 700 million and they lost 100 million. So these small caps are just really risky. That could be a fun little swing trade, but I don't know if I just buy and hold that one for the long run. Yo, Pierre said Ford stock. Hey, I had a share of Ford. I sold it at 12. I got it for free. But here's Ford stock. Here's the unfortunate thing. This stock is lower than it was in the year 2000 or in 1999. So you bought this stock in 1999. You're really down bad on your position, which is unfortunate. They just sell a commodity. But the real reason people like Ford are now is a dividend play. Check this out. You get a 6.4% dividend yield on this company, and the payout ratio is only at 55%. So you basically buying this one for high income. And look at that. They've had a nice little recovery the past couple of days here. So nice. TMC. Yeah, dude, TMC, this is the company. They don't have any revenue right now, but they just issued a bunch of cash. It really helped out their balance sheet because right now they have more liabilities than assets. They're a revenue-less company. They basically make robots that suck the nickel and copper and stuff out of the ocean. But they have more liabilities than assets. They just rose a bunch of cash, and it's helping out their stock. What do you think about Target? Oh, Target. So yeah, this is another great dividend play. So this one has been hurt a lot more than like a Walmart because they're way more discretionary. Like when you go to Target, you're not just buying groceries. You might be buying some like clothing or like furniture. I don't know. It's more discretionary of a store. Yeah, look at that. Only 25% of their sales come from food and beverage. Then they're in household essentials, apparel, and accessories, home furnishing, beauty products, hardlines. So here's the dividend. Here's the good news. You get a nice dividend, a 4.3% dividend yield, and the payout ratio is only at 50%. So that's a safe dividend payout ratio. So you get 4% of your money back a year, which is cool. But I think this is the reason why Target's falling. They kind of just lost their growth. It's not the end of the world. The revenue is down 2.8% from the previous year. So the revenue is negative growth, and that's the lifeblood of the company, the revenue. So we want to see the revenue kind of get back to growth. But the net income did grow 9% year over year. So that means they did grow their margins a little bit, 4 or 5% net margins on target. So yeah. TTWO. Hey, yeah, this is the company that owns Rockstar Games. So if you've heard of Red Dead Redemption, you heard of GTA 5, this is the company that owns it. And as y'all know, GTA 6 is going to be released. Did they delay it? It might be 2026, but Take-Two Interactive owns GTA 6 and they're going to release it. And whenever they release GTA 6, it's supposed to be literally one of the top 5 biggest games of all time. It's literally going to the second they release GTA 5 that month, they're going to make instantly billions of revenue. So here's a company that they have this asset that literally soon will make them billions of revenue just instantly. And probably forevermore, they'll probably have some subscriptions and add-ons and stuff, So it's tough buying this one at an all-time high, but they're an interesting company. They own Rockstar Games. I think they own The Sims as well. So yeah, they're cool. Hey, what up, Askeo? How's it going? So, let's see, Iron Mountain, IRM, right? IRM, is that I think this might be a REIT, a real estate investment trust. Let's see, what's the dividend on this company? So yeah, you get a 2.85% dividend. Yeah, this is a REIT. They're a data center REIT. So basically they own a bunch of data center land. So yeah, let's see, global data center business. Well, hey, look at the growth on this. It's very nice. I mean, it's growing 20% year over year, growing 20% every quarter. So that's really good growth over there in Iron Mountain, actually. And yeah, you don't look at the net income for this company. You want to look at the cash from operations because this is a REIT. They're taxed differently. They actually have to, by law, pay out most of the income they make in the form of a dividend. So that's why they have this 2.85% dividend yield. It's actually sustainable. Thoughts on TALK? Let's see. Is that Talkspace? Let's check this one out. So here's Talkspace right here. So yikes, this one hasn't done too good. Stock is only a $450 million company. So a very small market cap. But let's see. Let's go check out the fundamentals here. So they actually are starting to make some net income. So that's actually great news. They're finally starting to make some net income, which is good. The revenue grew 15% year over year. And yeah, they're starting to make, so it's actually really good news. And as long as I can keep that up, and a really good balance sheet. Wow, looks like they have no debt and 108 million of cash. What was the market cap again? 450 million. So literally 20% of their market cap is just their cash on hand, and they're starting to get profitable. I like Talkspace. That one could be really interesting as long as I keep that up. Thoughts on BKSY? Yeah, hey, try not to spam. I want to get to all the stocks here. My fault. So here's Black Sky. I think this is like a satellite company. I don't remember. So they're a small one, only a $680 million company. Look at that. They've done really good the past couple of months and weeks. So congrats if you own them. You're probably up on your position. But let's see. Imagery, software, analytical services. Well, let's go to revenue. Let's see. So they have 30 million of revenue and it grew 21% year over year, but they're losing 10 mil, 20 mil a quarter. That's not, we want to see this company get profitable because they are losing a lot of money. Cash from operations is good. There's actually seeing some pretty solid revenue growth. I don't know though. I'd still be really careful now. When small market cap losing money, yeah, that probably wasn't too helpful. I apologize there. Let's see, BUL. Yeah, this is Weeble right here. Their share structure is just a little too complicated. So if we look at the stock, the only 5% of the shares are available to trade, or I think 8% now. But it went from, they IPO'd this day, went to $70, and now here they are down at 14. And they're a brokerage. Hey, I have a Weeble. Oops. I have a Weeble account right here. Here's my Weeble account. I think we're at an all-time high in here today. I love my Weeble account. We're up 12% today. Let's see what went up the most in here. But yeah, I probably give them a lot of fees. Oh yeah, someone said update on PSIX. Yeah, this is the company I bought literally 2 days ago. I bought this company 2 days ago at an all-time high. People on the stream are calling me crazy. They're like, yo, you bought the stock at all-time highs. But this is what I'm saying. These stocks just continue to hit all-time highs. Like that's a stat. Here's a stat. Whenever a company hits a new 52-week high or an all-time high, is statistically followed by a cluster of new all-time highs. But the same is also true in the opposite direction. When they hit a new 52-week low, it's statistically followed by a bunch more 52-week lows. So anyway, let's see. Yeah, Weeble's interesting. And they're profitable. They're making like 10 mil a quarter now. And Robinhood's an $80 billion company. Weeble's like an 8. And okay, here's Google right here. Yeah, I love Google. I do own this one right here. This is a stock that I think is a great buy and hold forever company. I wouldn't sell out of Google. You get a nice dividend now. They just started paying a dividend. You get a 0.5% yield, very low payout ratio. Look at this valuation. For a Mag 7 company, Google trades at a 20 PE. That means they trade at 20 times net income. That's very low, very fair. They own Android, they own YouTube, they have Google Cloud, they're in cybersecurity with Wiz, they have their quantum chips, they have their TPUs, they own Waymo. They're an ETF in one almost. So anyway, if we look at the revenue on Google, 90 billion, the revenue grew 12% year over year. So remember that growth rate. Revenue grew 12%, but if we go to the bottom line, the net income, it grew 45% year over year. So that means they're growing their net margins, and that's an incredible story here on Google. They're really a margin expansion story. So yeah, and look, just the Google Cloud business, this is such an underrated segment of business. I mean, the Google Cloud revenue literally went from, it's just growing massively. Anyway, I like Google. Low valuation, but they do have some issues with LLMs coming for their search business. All right, let's see. BYD. Hey, this is that they're the Tesla competitor in China. So dang, they're at an all-time high. This company is really taking market share from Tesla. So this stock is at an all-time high. Warren Buffett and Berkshire Hathaway own BYD. Seems like that was the right move. So yeah. Oh wait, BYD. I am at the Las Vegas locals. Am I on the right company? I might not be. I don't know. Net income? Yeah, this is not the BYD I was talking about, but maybe this is the stock you're talking about. Yeah, they're making 100 mil a quarter. Well, this stock is at an all-time high. Huh. We were looking at BYD Gaming. Here's the stock we actually wanted to see. Look how similar the two stocks look. I literally thought that was the right company because the stocks look so similar. But anyway, here's the stock we actually wanted to look at, BYD. This is the Chinese Tesla competitor right here. Let's see. Warren Buffett does own this one. Oh yeah, this is the metrics I wanted to see here. Yeah, vehicle deliveries and stuff. But look at the bottom line here. This is incredible. I mean, for the full year 2024, they made 5.7 billion of net income in US dollars, which I think was way, way, way more than Tesla did. I feel bad for Tesla. Their margins have collapsed. Tesla has lost all growth. I mean, Tesla has a high PE. Look at their total vehicles delivered on Tesla. It's down 14% year over year. We can see that. If we just go to their automotive segment revenue, it's down 15% year over year. So Tesla and their high PE, it's tough to buy them, the high PE, and they lost their margin. So look, revenue fell 9%, but look at the net income. It fell 70%. That means, their margins are going in the toilet. I mean, they only had 2% margins. Poor Tesla. Let's see here. Let's get back to the stocks. WOL. Yeah, this is a company. I feel bad if you own Wolfspeed. This is a stock you probably don't want to own. But I guess if you owned it before today, congrats, because you're up 50. I mean, but look, it's up 50%. You can't even see it, because they just keep hitting new all-time lows before this day. But anyway, Wolfspeed, $180 million company. So remember that this whole company, you could buy all of BYD for $180 million, but here's what you're buying. They lost $300 million just in the most recent quarter, $300 million the quarter before, and another $300 million the quarter before. I mean, they're burning money hand over fist. So that's why this stock just keeps hitting all-time lows. Yeah, they're up 50% on the day, but they're probably going back to all-time lows. So I'd be very careful with Wolfspeed. Not to be embarrassed, but I mean, the fundamentals are so bad. I mean, just kind of just think about it simply. The whole company's worth 200 mil and they lose 300 mil a quarter. I should be so careful. All right, let's see. AIRO. What's this company? I haven't heard of that one. Oh, they're on my watch list actually. Hold up. So AIRO stock. They just IPO'd 2 weeks ago, back when Circle did. So let's see. Yeah, so this is the drone company. So yeah, if you're looking for a company that sells drones, looking for drone exposure, wow, look at the growth here. 3 million to 30 million to 75 million for the full year. This is incredible growth. And then they have the training, avionics or whatever that said, but that's really impressive, man. That's a drones company. Let's see, LTRY. What's this one? Oh, I don't want to say the name of that, but let's see. Really small company. Again, $34 million company. And look at the revenue. So the whole company's worth 34 mil, and the revenue is 200,000. So they don't have any revenue basically, and it's down 13% as well. So they have no revenue, and they're losing millions a quarter. I wonder why the stock is. Maybe it's just momentum, but I wonder why they went up so much. I don't know. Maybe they gave good guidance, but I'd be careful with that one. Small market cap, no sales, losing money. Here's a really profitable though company. Yo, JP Rez, he said, Netflix, dude. And we'll look at APLD after this too. This is Netflix right here. I love this company. The only thing that's tough is that it's at a high valuation. It's tough to buy them at all-time highs. But look at this. Here's why they kind of deserve it. Look at their premium subscribers 1 year ago. I love this data. So their premium subscribers 1 year ago were 260 million. Now it's, in the most recent quarter, 301 million. So it went from 260 million to 301 million premium subscribers. I mean, incredible growth there on the premium subscribers. And we can see the average monthly revenue per paying membership. So they make $11.69 per user per month. So that's really interesting. And look at this net income. I mean, they're so profitable. They're making $2-3 billion in net income a quarter. Randy, oh yeah, hey, if you want to get the platform I'm on, it's in the link tree in my bio. It's that very first link, the very first link in the link tree in my bio if you want to get the app I'm on right here. It's a brokerage. But yeah, Netflix, I love the net income on this company. The FCF, which is free cash flow, is insane. So yeah, Netflix, they're a great company. And then let's go look at APLD. So let's go to NVIDIA's portfolio. So did y'all know NVIDIA owns some individual stocks? And yeah, there's Jensen Huang's face. Yeah, they own CoreWeave, ARM, and then their third largest holding is actually APLD. And here's what I really like about this stock right here. They did just partner with CoreWeave. So I kind of think that was orchestrated by NVIDIA. Of course, two companies NVIDIA owns go into a huge partnership. So anyway, APLD, this is what no one talks about. And this is what I love about them. It's the cloud service business growth. I mean, this is incredible right here. The revenue grew 220% from the previous year. I mean, that's just incredible growth. 220% revenue growth on the cloud business is great. And they are still losing net income every quarter, so you do got to be careful of that. They're still losing a lot of money, but the revenue growth is there. And with this new partnership with CoreWeave, it's going to grow even more, so that's cool. Chime, is that a stock right there? CHIME? Chime Financial, CHYM. Oh, they're public. I didn't even know that. They just IPO'd. You know what? I'm going to add them to the watch list. Let's see. Do they have good fundamentals? Let's go check it out. So, they just IPO'd, so there's not much data, but the revenue was 518 million, and they made net income on that. So they are a net income positive company. So there's just only 2 quarters of data. That sucks because they just IPO'd, but they're interesting. I didn't know they were public. Bassness said, TEM, please. Yeah, dude, Tempus AI. This is the company that was bought by Nancy Pelosi and her husband. So I really like this one. They're niche. They're in the genomics business, and they have incredible growth. I love companies that are growing, and this one checks the box. So check this out. 75% of the revenue, the genomics. Look at the growth. Up 89% from the previous year. So they've seen some very impressive growth on the genomics business. And not just that. It grew 90% year over year, but look at the data and services as well. It grew 44% from the previous year. So both of their main segments of business are growing like crazy. They are still losing net income, but they have so much growth that it doesn't matter. They'll kind of outgrow that in the future. So that's cool. Real Toaster, hey, if you want to get this app, it's actually a brokerage, but if you want to get the software I'm on, go to the link tree in my bio. It's the very first link there. It's free. I love the app for all the analysis, and you can see all the watch lists and stuff. It's where I have my main brokerage. It's where I like to keep my cash too. If you look in the middle of my screen, I got a lot of cash earning me interest, earning me them dollar hollers. So that's cool. Anyway, let's keep going here. Roblox is the best stock. Yo, that's a Kathy Wood play. Let's go to Kathy Wood's portfolio down here. Check this out. So, where is she? Kathy Wood's portfolio. She owns Coinbase. Wow, that's her largest holding. Coinbase, then Tesla, Robinhood, and then it's Roblox. Roblox is 7% of her portfolio. And look at this stock price appreciation. That is incredible. Yeah, you're right. ALV, it has grown over 100% in just a few months. It's probably from their user growth. Look at this. I love this data we get here. Look, this is their daily active users. So they literally have 97 million daily active users, and it grew by 15%. So really good growth there. And look at the FCF, which is free cash flow. The free cash flow grew 128%. I don't think analysts expected that. Yeah, they beat on revenue, they beat on net income and EBITDA. So they beat on all three metrics according to the analysts. So there is bad. Here's one bad news though. It's the net income. The trend is getting better. It's 20% better than the previous year, but they're still losing 200 million of net income a quarter from their stock-based comp. They issue a lot of shares and give them to employees, and that's included in GAAP net income, and it's not included in free cash flow. That's why the free cash flow is positive and net income is negative. And they're a bit leveraged, like the liabilities are close to assets, but still they have incredible metric growth that really have beaten the analyst expectations. So I see why they're doing so good. The free cash flow is nuts. All right, let's see here. Humble said IREN. Joe, I actually really like this stock. Let's check it out right here. So look at that. They're up like crazy. Oh, there's a article here. IREN purchases 2.4 thousand NVIDIA Blackwell chips for $130 million. Wow. So I wonder, is this like a Bitcoin mining company? I don't know. But they're buying a bunch of GPUs. And wow, look at this is why they're on my watch list. This is incredible revenue growth. Check that out. The revenue grew 166% from the previous year. So incredible revenue growth. And if we go to the net income, they actually made net income in the most recent quarter. 24 million the most recent quarter, 20 million the quarter before. So IREN, I see why this stock's at an all-time high today. Or 52-week high. Yeah. Nice. They're on my watch list. Chris said QXO. Hey, wait, QXO. Look at AMAT. Hey, thanks, Eric. I appreciate you. Wait, QXO. So this might be the roofing company. So yeah, this is. I literally just a couple of days ago was like researching this and their CEO. This is like a roofing products company. They kind of move with the home builders. Like let me double check that. Yeah, distribution of roofing, waterproofing, and building products. So yeah, roofing, building products company. Let's see, are they profitable? Yeah, look at that. They are making net income in the most recent quarters. So look at that. They're making net income every quarter. And look at that balance sheet. Wow. No debt, lots of cash. I'm going to add them back. I'm going to add them to the watch list because I got to do more research on them because they did fall like crazy. I'm 21, for family fishing in my BA, what to grow. Have any advice? Yo, that's awesome, Italiano, that you're interested in investing, man. Yeah, dude. Like, you just got to buy the S&P 500, and it returns 8% a year on average. You buy the S&P 500, you start with $100, and then in 1 year it turns from 100 to 108, and then it compounds, and it goes from 108 to 120, then from 120 to 190. Yeah, you kind of get the. But anyway, let's go look at AMAT and SHUYU. He said, what happens is, yeah, if you want to get this app, or it's a brokerage, it's a software. If you want to get this thing that I'm on, it's in the link tree in my bio, that very first link there. If you want to get it, it's free. But let's go look at Applied Materials. Let's do some analysis on this company. They're not a 52-week high, but they're the highest they've been in a few months, which is great news. Let's see, dividend. I saw they pay a dividend. Yeah, you get a near 1% yield here. So 0.8% yield, a very low payout ratio. They got a lot of room to raise their dividend. Yeah, look at this PE. The PE ratio is a 23, so that's a very fair valuation, 23 times net income. This is a semiconductor play, so look at that, 75% of the revenue from their semiconductor systems. It's up 8% year over year, not bad, not crazy growth, but up 8% year over year. Yeah, so that's probably why the stock is kind of not at all-time highs. It might just be slowing growth. Like the revenue's only up 6.8%. But hold on, the net income actually grew 25%. So hey, that means they're growing their net margin. Net margin is now at 30%. Wow, it grew 16% year over year. So yeah, they're a nice dividend play, low valuation. That's probably why they're at a low valuation. Would love your thoughts on Anduril. I think, okay, I don't know the ticker symbol for that one, but you know what? I'll type it in for you since I appreciate you being here. Anduril. Okay, unfortunately, I don't know the ticker symbol for that one. Or maybe I can't find it on here. Let's see, DDOG. Yeah, that's the company that got added into the S&P 500 today. This is like the cybersecurity stock. Look at that. They're up 15% on the day, literally just from the news that they got added into the S&P 500. So yeah, let's see. Oh yeah, I wanted to look at UHC as well. So wait, UHC. I typed in that ticker symbol. I can't find that one. So guess we're not going to look at that one, unfortunately. Anyway, let's keep going here. So, I own this one, SoFi. Yeah, we've already kind of looked at SoFi a few times. Yeah, here's my growth portfolio, by the way. We hit an all-time high in here today. We're up 12%, which is pretty cool. The fintechs have been going nuts, like Robinhood, SoFi. We got some super microcomputer. But yeah, and here's the most recent stock I bought, by the way, PSIX. This is a cool one. They're at an all-time high, or not an all-time high, but 52-week high today. They've been crushing it. They're up 11%. Wait, did that say 11% today? No. Yeah, they were up 11% today. No way. Let's see, BMNR. Hey, BMNR. We were looking at that one too. I think that's. Oh yeah, I don't know what the news was. $800 million company. They're down 15% after hours. I- is there news? Like I don't know the news. Is it just like oh wait maybe it's right here. Um, Raises 2.7 million in offering. Yeah, I don't really know what it is, but they're up 130% on the day. So geez, congrats if you own them. Is that an all-time high on this stock? Let me go to the weekly here. Oh no no no! This one has been around for a long time, since 2008 or even before that. So all right, Andrew's not public. Oh okay. What's up, Jello? Um, let's see. Look at Weeble stock as well, yo. Yeah, I appreciate y'all being here. I'm gonna end the stream here in a minute. But let's see, Weeble stock. If y'all want to support me though, best way to support me is just subscribe to my YouTube channel. Actually, the best way to dang, Weeble's down 7%. Hold on, what just happened? Full day. Yeah, they're down 7% after hours. Did they like report earnings or something? Weeble shares secures 10 billion or 1 billion equity deal. Yeah, that's like 20% of the market or yeah, I don't know. Anyway, this is just a brokerage right here. They're an app. They are profitable, which is good news. They have a weird, complicated share structure. They have like three different kinds of shares or whatever. But look at this right here. They made 12 million the most recent quarter, 10 million the quarter before. So they are profitable, which is good news. And they have like a 10% margin, I think. Because yeah, revenue's 100, probably 11% margin. Yeah, nice. But yeah, all right. URI, yo, United Rentals, yo, United Rentals. That's one I do own as well. They've been performing very well, like surprisingly good. Like, look at that. They're at a new, well, not 50 or maybe 52-week high, but year-to-date high for sure. They have an insane dividend growth. I mean, they just started their dividend. You get a near 1% yield. They only have a 16% payout ratio. The PE is a 20. They do general rentals and they do specialty rentals. And the specialty rentals has really been the huge growth factor here. The specialty revenue is up 23% from the previous year. So that's really good growth on United Rentals. And just the net income's been strong. They're making, over easy 2 billion a year. Whole company's worth 51. So yeah, that 20 PE. BABA. Oh, hey. Yeah, if we go to the Chinese stocks, we'll go to the Chinese tariff tech watch list right here. So, my favorite Chinese stock is Tencent. They own so many other Chinese names as well, like small parts of it. I always go to a Chinese stock and I'll go to the largest shareholder and I'll see that it's Tencent. But another one I like is Alibaba right here. Yo, Yazo, how's it going, dude? So here's Alibaba right here. This is the Chinese Amazon. Or if anyone's heard of AliExpress before, it's used by a lot of e-commerce people. People will buy a bunch of stuff on bulk on AliExpress and then sell it. Anyway, besides that they're Chinese, I do like this company. Check this out. 15 PE on this company, really good. Active customers, 903 million. Up from 811 mil. And look at this net income right here. This is probably the best part. I mean, they're printing money on that. They're making billion. This is in U.S. dollars. They're making billions of U.S. net income every quarter. 6 billion, 6 billion, 3. So yeah, probably like 3, 4 billion if you average it out every quarter, and you get a dividend. They just started paying a dividend, which is cool. So yeah, that's a cool Chinese company. What's your top 10 foreign stocks? Could you make a video on that? Yo, so I only own one Chinese company, and I only own one non-U.S. stock, and I'll share with you that one. It's in this portfolio. And it's this stock right here, ticker symbol FUTU Holdings. So this is actually my only Chinese stock right here. And if you're wondering, what is FUTU? Well, I've been using it the whole stream. If you're like, hey, what is FUTU? What are they? Well, it's actually Moomoo. It's this app right here. This brokerage that I'm on right now, it's called Moomoo. They're actually a publicly traded stock. And by the way, if you're like, hey, I like this app, it's in the link tree in my bio, the first link there if you want to download it. It's an affiliate link. But anyway, here's why I own this company right here. They have incredible metrics. So here's the active users. They have 26 million number of users. Client assets are at 106 billion. Brokerage, they make so much interest income. But look at this net income. This is probably the best part right here. They're printing money. I mean, 200 million a quarter. It grew 108% from the previous year. So incredible growth. I mean, revenue grew 82, net income grew 108. What's their net margin? A 45% net margin? That's crazy margins. I mean, yeah, this is a Weeble competitor. Yeah, Weeble is too, but FUTU, they also just paid this special dividend right here. Just a few months ago, they just paid $2 a share. So that was like a near 2% return at the time. So they literally just gave you a 2% return in cash and a dividend instantly. Anyway, that's why I really like this stock. And this company is just this app that I'm on. They traded a 20 PE. Anyway, yeah. Let's see. Palantir still a hold. Yo, oh wait. Hey brother, when does market close today? Market already closed an hour and 13 minutes ago, brother. Market closed at 1 p.m. and markets will not be open tomorrow. So markets are closed for the 4th of July, and for whatever reason, they closed at 1 p.m. today. So here's Palantir right here. So no trading tomorrow, RIP. I'll still probably stream tomorrow. Yeah, if you want to hit the follow button, I'll probably still go live tomorrow if I'm not busy. But here's Palantir right here. This company, someone says, is it still a hold? It's tough to hold here. Well, because the valuation is so high, but I would probably hold it. I would definitely wouldn't sell out of all my shares. I'd maybe trim the position. I wouldn't sell out though because of the high valuation. But here's the best part about Palantir. People don't really look at, like, it's the government revenue growth. You know, so many police stations use Palantir. And look at this. The government revenue grew 45% from the previous year. I mean, incredible government revenue growth. And if you go to the commercial business, it was up 33% from the previous year. So both main segments of business are growing like crazy. And they have no debt either. They have an incredible balance sheet, monster balance sheet. No way, Cruz. $5 super chat. Hope you're having a holiday weekend, homie. Thank you so much, Cruz. You too, dude. Happy 4th of July. I hope you're going to have a great weekend as well. I really appreciate you, brother. Yeah, we're going to have a barbecue tomorrow. It'll be fun. Really appreciate you, dude. Thanks for the $5. So yeah, Palantir, great balance sheet. All the fundamentals are great there. But yeah, shout out CRUZ. He did it on the YouTube stream. Thank you so much. Yeah, for y'all on the TikTok stream, if you want to support me, best way to support me, the only way to support me, because I don't sell anything. I don't have a course, a book, anything. The only thing I do have is a YouTube channel. The best way to support me is subscribe to my YouTube channel. It's called Nathan Robert. It's also in the link tree in my bio. And you can watch the stream from there as well if you missed anything. Actually, the best way to support me is not just subscribe to my YouTube channel, but subscribe to my channel and watch a video. Because if you just like subscribe to my channel and then just don't watch any videos, it might hurt me. So, hey, if you want to help me out, just watch a video or two. Till the end, you know, click the ads. I don't think I could say that. Yo, I have a YouTuber friend. He had 1 million subscribers. He would tell his people on YouTube, yo, click on the YouTube ads. It'll make me more money. And they took down his 1 million subscriber channel. Anyway, let's keep going here. Do you think day trading is worth it? I don't really think so. I really, if you're good at it, I really just like buying and holding great companies for the long run. Companies that compounded over like 10% a year. So you make 10% a year and then plus more. So yeah, these are some of my biggest performers. I've taken a lot of profits on these. Like I sold 2 Dave yesterday. So I was up 280%. I had to take some profits. Robinhood, we took a lot of profits on Robinhood. We're up a stupid 600%. So, hey, Cruz, I got you, dude. He said, what are your thoughts on OKLO? So this is the nuclear startup right here. Actually, I'll go to the watch list right here. So Trump pushes energy order to power nuclear AI. OKLO is supposed to be one of the winners here. And but this one is a startup right here. Yo, we'll look at SoFi and CLS. What up, Bob? So here is OKLO. If we go to their revenue right here, their financials, they don't actually sell anything right now. They are a startup. So if we go to the revenue right here, it says no data because they don't sell anything right now. They don't sell a product or a service or anything, but they have a monster balance sheet. Look at that, 300 mil of cash, no debt. The liabilities are so low. They're barely losing any money, like 9 mil a quarter. I mean, that's nothing. So yeah, this is just a huge AI kind of nuclear energy momentum play. And they're backed by some really famous people. I think some OpenAI employees work there. Wait, view CLS, someone said. And then we'll look at SoFi. I got you. All right. So real question, where you putting that $5? Hey, after YouTube takes 45% of that super chat. So RIP, that $4.99 gives me like $2.55. But I'll probably just reinvest that in some stocks. But here's CLS right here. Wow, look at that. The stock is at an all-time high today. So congrats if you own them. They're actually a Canadian company. So let's see, CLS right here. They do connectivity and cloud solutions. So yeah, that's an industry you want to be in. How's it doing? It grew. Yeah, look at that. It grew 30% from the previous year. So that's actually very solid growth. I can see why the stock's at an all-time high. What about net income? Yeah, they're profitable. They're making 100 mil of net income a quarter. That's really good. So they're a profitable company, growing double digits. Yeah, and they're Canadian too. Best stock to put 1K into right now. Yo, it's tough. Um, Finding anything with the market at all-time highs right now. The safest bet would just be put it in the S&P 500, but I'll show you what I just bought yesterday. So someone said been talking about SoFi. Yeah, hey, amen. Isn't a rapper called that too? Uh, SoFi, I really love this company. I think they're at a 52-week high today. Here's why they deserve it and they deserve all the hype around them. It's because of this right here. They're a fintech financial services right here. Look at this. It's up 101% from the previous year. This is just a huge growth company. SoFi's just growing their business like crazy. The financial side, the financial services revenue grew 101% from the previous year. So just incredible financial services growth. And, it's not just that, the lending too, that's where most of the revenue is. 53 comes from lending. The lending revenue grew 25%. Very good growth. And if we go to the bottom line, the net income, they're making net income every single quarter. This is a very profitable company. Because if we zoom out to last year, they were losing net income every quarter. So I just really like SoFi, and they're a hold, I think. Yo, Jello, thanks for the heart there, for the rose. I really appreciate that. Thanks so much. About option, what up, Wally? I don't I don't know what you mean there about option. Let's see. Tesla, yo. So you're not gonna love my thoughts on Tesla right here. I do think this one's a slight bit overvalued. Yo, A-Bum, if you want to get this app I'm using, it's in the link tree in my bio. It's the very first link there if you want to get the app that I'm on. It's actually a brokerage. It's an affiliate link too. We'll both get some free stocks if you sign up and pause it. But anyway, here's total vehicles delivered. This is the bad news about Tesla, is that they kind of lost the growth of their vehicle deliveries. And so and they have a high valuation, so it's tough to pay the high valuation for no growth. Like, look at this right here. The growth is going to come in probably the future from the robo-taxi network and the robotics. But for right now, for judging their financials right now, they're not great because their automotive revenue fell 15% year over year, and that's 85% of the revenue. So if we go to revenue right here, revenue fell 9.2% year over year. So the revenue fell 9.2, but the net income actually fell 70%. So their margins have absolutely collapsed because they got their tax credits taken away from them. So I don't know. It's a mixed bag there. You got a good CEO. Well, CEO might be a little too political, but I just stay away from Tesla. But they'll probably still do great. APG stock and UNH. Oh, SoFi. Someone said SoFi is the biggest inflated bubble ever. Well, hey, it has a lot of good growth. So the metrics, the fundamentals of the business are growing like crazy. Literally, the financial services doubled. So someone said APG stock. And then we'll look at UNH. Yeah. Wow. Look at this. This stock's at an all-time high today. They're a $15 billion company. They've had a nice rally. What do they do? So safety services. So, hey, maybe they're like security, safety. The revenue grew 15% year over year. Did that beat expectations? Yeah. So they beat like a good chunk on revenue. So it's good. Let's see. They did miss on net income, but the revenue grew 7%. They're still making net income every quarter. So this is a profitable company making net income every quarter. They did a stock split. Oh, you're right. They did do a stock split. That's what that little thing is. Okay. Yeah. Hey, congrats if you own them, dude. They've done great. Run over. Hey, what up, Austin? Um, in Oh wait, Nvidia? Hey, yeah, I haven't looked at Nvidia yet. Yo, how have I not looked at Nvidia yet? So I got you. Let's go look at Nvidia. So yeah, I don't think this whole stream I haven't looked at Nvidia. So here's Nvidia right here. I love this company, but they are at an all-time high, so tough buying them here. But congrats if you own them because look at this right here. All their metrics are just what you want to see. Like, look at their PC GPU market share. Did you know Nvidia has an 18% PC GPU market share? But here's the real reason Nvidia deserves the hype around them. It's just the growth here. I mean, what other company literally their revenue went from 15 to 39 billion? I mean, look at it on an annual basis. Literally 2021, 6 billion of revenue, for the full year or fiscal year 2025, 116 billion of revenue. What other company can pull that off? I don't know. Only Nvidia. But look in net income too. Look at this net income. They're making near 20 billion of net income a quarter, and it just grows. It's just expected to keep on growing from here. So Nvidia, I like them, and Nvidia is so huge that they own some individual companies as well. We can go check that out too, actually. Amazon owns some stocks as well, but let's see. Where's Nvidia's portfolio? Yeah, right here. Nvidia owns CoreWeave. Yeah, Nvidia bought the dip on CoreWeave at 40. They own ARM, APLD, Nebius, WeRide, a lot of these names. So yeah. Can you check KTOS? That's Kratos. So I think this is another drone company. So yeah, Kratos Defense and Security. Look at that. The stock's at an all-time high today, or pretty close to it. So congrats if you own them. I'm pretty sure this is a drone company. So yeah, Kratos Government Solutions. Hey, that's 230 million. Oh, so unmanned systems. I think that's what drones are. Or that section of revenue. So 20% of the revenue comes from drones and stuff. Interesting. Are they profitable? Yeah, dude, they're profitable. Look at that. They're making, net income every quarter. It's only like a couple mil, but still they're profitable. They're not losing money. So that's great news. I can see why they're at all-time highs. Can you check out Flex Heart said SSS stock? I can't find that one unless you're talking about short SMCI stock fund. I can't find that one. I'm sorry. Let's see. Buy stock or buy option? I just like buying shares, buying stock, especially dividend paying companies. You get to own some stock and they pay you payments of little, tax-free dividends every now and then. And I like dividend growth. I know some non-paying, like in Amazon. Amazon doesn't pay a dividend, but they're so innovative. This is why Amazon doesn't pay a dividend, and it's okay. If we go to their cash from investing activities, they're literally investing back into the business 20 to 30 billion a quarter. So they should have a lot of growth. They're so innovative. I like Amazon. Kratos, I think, does satellites. Oh, okay. So Kratos does satellites. Let's see. BB AI. Yeah, the Big Bear AI. I can't really find out why the stock was rallying so much. It might just be momentum, but hey, yeah, congrats if you own this one. It's done pretty good. They're a $2.2 billion company. They have lost quite a bit of money. They've lost over 200 million the past year, and that's 10% of the market cap. So they've lost 10% of the market cap in net income the past year, but it's not the end of revenue grew 5%. I just got to do more research on this one. Volume's going up. I think they're in like a cyber business. I don't know. That probably wasn't too helpful. Sorry. Randy said, can you look at CLS? Yeah, we've looked at this one a few times, but I'll be quick. This is the Canadian company, Celestica. Look at that. All-time high today. Wow. They were a $9 stock in 2019. So, yeah, they've just exploded recently. So they're a connectivity and cloud play. And look, the business is growing like crazy. It's up 30% year over year. Look at that one quarter. Incredible growth on CLS. And they're profitable. If you go to net income, they're making, 100 million of net income a quarter. So that's the good news about CLS. I see why they're at all-time highs. Let's see here. Oh, UnitedHealth. Yeah, so UNH, this is the company that they own OptumRx. So if this company gets accused of fraud, and there's a small chance of that. If they get accused of fraud, they're going to get kicked out of Medicare and Medicaid for 5 years. And that is actually half their revenue. Half the revenue comes from Medicare and Medicaid. So the uncertain future is why the stock has fallen so much. Look at the valuation. It's a 12 PE, very low, very cheap valuation for a great company. Look at this dividend. You get a 2.7% dividend yield. We're a customer. We use OptumRx. The OptumRx growth has been ridiculous. In 2020, it was 35 billion. Now it's 135 billion. Maybe that's why the government's not too happy with them, because I don't know how they did that. But anyway, they're printing money too. Literally 7-8 billion in net income a quarter. So unit or probably like 7 billion. But as long as they don't get in trouble, they're great. Baby AI is Baby Palantir. Oh, what up, Triangle? I didn't know that. It's SSSS. What is this one? Oh, this is the BDC right here. So this is a BDC right here. Basically, they do lending and stuff. Let's see how they're doing. Sometimes the revenue goes like negative. It's weird. So yeah, they're just a super small company. Like, look, most recent quarter was 500,000 of revenue. That's nothing. Yeah. There's just so little revenue. Oops. Sorry, mom. Gonna I'm gonna have to call her back. She's not gonna like that. Shoo. Yeah, honestly, nothing's really blowing me away. This company. I mean, the revenue's just so little. It looks like they're losing a lot of net income. The dividend, they paid $8 in dividends in 2021. I remember them. They had a really high dividend, but they don't pay a dividend anymore. Let's see. Hey, ACHC. Acadia Healthcare. So this stock is unfortunately at close to an all-time low right now. They're a $2 billion company, so that's a very small market cap. A $2 billion company. Do they pay a dividend? No dividend. I wonder why they're at all-time lows. That's unfortunate. Behavioral healthcare services. Huh. Oh, so the margins kind of just collapsed. Look at that. The net income fell 88% year over year. So yeah, revenue was flat. Revenue was up zero point 0.3, but the net income collapsed 88%. That means that, yeah, look at their margins. What just happened? Used to have a double digit margin and it just fell to 1%. Maybe it was a one time adjustment. I don't know. Yeah, it only fell 49%, but that's probably why the stock has fallen so much. Their margins have really just fallen. Never skip, mom. Yo, Gamma, I'm gonna be in trouble later for that. Favorite egg stock? Yeah, that'd be CALM. This is Calmain Foods. I do own this one. This is they have a 20% market share for chicken eggs in the US. Do you use free cash flow yield to value companies? I do, JVM. I love the free cash flow yield. Um, so here's Calmain Foods. The reason I really like this one because they have a sustainable dividend. They actually have a 7% dividend right now, but basically, whenever they make net income, they pay a certain percentage of that out in dividends. So their dividend changes every single quarter, but there's like the bird flu and a chicken egg places got burned down and stuff, and it's just helping out Calmain's profits. They made half a billion in the most recent quarter. That's what egg prices are nuts thanks to Calmain. But I do own them, so and here's the crazy thing: we also just got a dividend. They paid what was this? A $3.50 dividend, and the whole company is $102. So they paid you 3.5% of your money back in a qualified tax-free dividend instantly. So I got an instant 3.5% return from that, just that one quarter of dividends. But yeah, the net income is just literally, I mean, look at that. It exploded. So that's cool. Yeah, so the free cash flow yield is just the percentage of the market cap they made in free cash flow. So if a company is worth a hundred billion and the free cash flow yield is 4%, that means they make 4% of their market cap in free cash flow. Um, when the housing prices will go down, can you check? Or wait, when can you? We could check that. Yeah, that. You know what's cool? This app has. I wonder if I can find it. There's a lot of really cool data here. I forget it though. Oh yeah, like there's all the. I don't remember how to do it, and that's not good because I used to have like there used to be these really cool. Oh, right. I think it's right here. Macroeconomic data. So there's a lot of really cool metrics you can use on this app. US CPI. We can see the CPI. 2022 was 9%. That was all that inflation. FOMC price target. So the chances of in July of a rate cut is a 4%. There's basically no chance of a rate cut. We can see the FOMC dot plot, the Buffett indicator, US Federal Reserve total assets, US, there's just so many cool US federal funds rate effective rate. It's a 4.33% right now, the PPI. I love the US unemployment rate. Anyway, if you want to get this app that I'm on right here, it's in the link tree in my bio, the very first link there if you want to get it. It's actually a brokerage. Oh, wait, here, I don't know if there's a description. If you go to that link, I typed it in the YouTube chat. If you go to that link tree right there, the first link, you can see, or you can get this app. It's free. It's completely free. And you can see all these like data here. Anyway, jobs. Anyway, let's get back to the stock analysis because that's what's important. Let's see. Don said AEHR stock. Let's see. AEHR. What's this company? So AEHR Test Systems. Look at that. They're up 3% on the day. They're a small company, though. They're only a $400 million company. Oh, yeah. Well, look at PanW. That's a Nancy Pelosi play. So AEHR Test Systems, let's go see what they do. I don't know. Maybe they're a systems, contractors. How's the contractor service? So very small amount of revenue. So yeah, if we go to revenue right here, it's only 18 million in the most recent quarter, but it is up 140% from the previous year. The net income's really choppy. Did they sell an asset to get that? They didn't, but congrats if you own them. This one just looks a little risky to me. All right, so let's go look at Pan W right here. Let's go back to Nancy Pelosi's portfolio right here. So yeah, she's a super investor, and by SEC law, she has to make all her trades and all her portfolio public. So we can see her main holdings, and 2% of her portfolio is in PANW, Palo Alto Networks. And I love this company. This is a cybersecurity play that's extremely profitable. They're actually a subscription company. So look at this right here. I love subscription model companies because the subscription is all recurring revenue. And check this out, 53% of the revenue comes from their subscription. And look at this growth. The subscription revenue is up 18% year over year, literally to a new record. I mean, the subscription revenue literally just hits a new record every quarter. So Pan W has just seen some incredible growth and net income. Look at this. They're making net income every quarter. They're making 400 million a quarter. And the free cash flow is even better. The FCF, yeah, they're making, geez, one, two, they're making 4 billion of free cash flow a year. So anyway, I like Pan W. That's a cybersecurity play. Cybersecurity is an industry that's going nowhere. I don't think any IPOs you got excited for. I don't know. I haven't seen any. Like we kind of missed all of them. Circle, Robinhood was begging me to buy the Circle IPO at $30, and I said no, and now it's at 120. Well, even if I bought it pre-IPO, you aren't allowed to sell it for like a certain amount of time anyway. So, um, let's see. FTNT. What do you? Yo, Gary, good to see you, friend. So, has anyone heard of a Dick's Sporting Goods? This is like their competitor, Academy Outdoor Sports. They're a stock right here. They just traded a super, super low valuation. They just sell a commodity, but go to the PE. They trade at an 8 times PE, and the industry average is a 20. So they trade at way, way, way below the industry average. And I like this one for the yield. So look at that. You get a 1% dividend yield, and the payout ratio is only a 7%. So they have a lot of room to raise their dividend. And what's the net income? Yeah, so here's where the revenue comes from: the outdoor sales, sports and recreation, apparel, footwear, selling shoes and stuff. But yeah, the business isn't growing too much. Like the revenue is down 1% year over year. Net income's down 40%. So they did kind of lose their margins. Yeah, the low margin business. But it's not too terrible. FTNT, what do you think? Yeah, dude, this is Fortinet. This is another cybersecurity stock. So cybersecurity software. My cousin was telling me about this stock because he uses the Fortinet software. He works in IT, but this stock has done incredible, and they deserve it too. It's another subscription model company. Yeah, look at that. 40% of the revenue comes from their subscription. And look at the growth here. I mean, this is why the stock is at an all-time high. I mean, companies with good growing fundamentals usually have good growing stock prices. So yeah, security subscription revenues at an all-time high, and they're profitable. Look at this bottom line net income, 500 mil of net income a quarter. I mean, they're printing after-tax profits. They may even pay a dividend one day. So yeah, they're doing great. Chime IPO'd last week. They did. What time did the market close today? It closed at 1. It closed 3 hours earlier today. So the market normally closes at 4. It closed at 1. So yeah, what's this app called? Hey, Elliott Waves. If you want to, it's a brokerage. If you want to get it, go to the link tree in my bio. It's the very first link there. If you want to get the app I'm on. Yeah, I love all the analysis and stuff you can do. Let's see. BKSY. Yeah, we were just looking at that one. BKSY. And this is just another really small company, but look at that. They are at like a new 52-week high today. I think they're in like satellite imagery. I don't remember exactly, but they're a $680 million company. So very small market cap, 680 million. They lose like 50 mil a year. Imagery software, professional and engineering. How's that doing? Well, choppy. But yeah, anyway, I just didn't see anything really that blew me away. I mean, the revenue is kind of all right. The revenue grew 22% year over year, but yeah. Anyway, I do appreciate y'all being here. Can't link in your bio. Wait, is there not a link in the link tree in my bio? If there's not a link in the link tree in my bio, that's my link tree. I just typed it in the chat, but I'm actually going to go in the stream here. I do really appreciate y'all. This is probably one of the longest streams I've ever done. Joxon said, do you still recommend buying PSIX at this price? It's tough. Probably not really. I mean, PSIX, I literally bought them 2 days ago, and we're up 20%. I mean, it's crazy. This is the stock I was telling people, or the people call me crazy. I bought them at all-time high, and I'm like, I think this one's just going to keep on going up to new all-time highs. But yeah, hopefully that link tree is in my bio. If it's not, then that's not good. But anyway, yeah, anyway, see y'all later. Hope you have a great rest of your day. Have a great 4th of July, man. Tomorrow's going to be fun. So yeah, anyway, thank you all for y'all on the YouTube stream. Y'all